After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean, but also We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission: track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030. 11
of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabasaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, eConcrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing eConcrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
eConcrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call it biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. eConcrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, eConcrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I love Gina Martin Adams for many reasons, but usually I'm the one who's running in like seconds before we start.
She's early.
She's early.
We got her on Quick Take earlier today, too.
Oh, you
so
did?
I get a double dose of Gina Martin Adams today.
Well, we're going to hear from her in just a moment. It is the first day of September. Go figure. I know summer not officially over, but it feels like it's over.
It does, especially here in New York, where the rain is certainly coming down.
Yeah. Get ready for those flash floods. Thanks, everybody. Stocks are up. Weak economic data, so it goes slowly. Listen, if you've been listening to Jay Powell of the Fed, Tim, we know he said it's going to take some time to get back to where we were in terms of pre-pandemic. This is why the Fed has been on hold.
Yeah, the question is, to what extent do people come back into the labor force who perhaps were in the labor force before and are not going to come back into it?
I think it's going to be different.
We're start getting the pieces of that on Friday.
Exactly, that monthly jobs report. Ahead of that, we're going to talk about the empowered employee. We'll do that with Richard Edelman. And then we've got a pair of stories on Wall Street about firms recruiting from black colleges, maybe not doing it as fast as they maybe promised they would be.
Also, the other story, what Wall Street South is doing to bring in those youngsters. Plus, are you looking for a job? Great.
Smoking pot?
Oh, that's also fine, too.
Come work at Amazon.
Spencer Soper is going to be joining us live from Seattle a little later in the show for that story. It's a fun one.
All right, first let's get going with a check on the trading day.
Charlie Pellet, how's it going?
Well, we're higher. The Dow, the S&P,
Nice,
NASDAQ,
Charlie.
all advancing right now. I'm looking at records with the S&P up 13 right now, higher by 0.3%. Dow Industrials up 10. That is a gain of about 0.1%. NASDAQ up 112, higher by 0.7%. Bottom line here, first trading day of the new month. We are looking at records, and worth pointing out just how NASDAQ is closing in on the S&P 500 index for the year now. NASDAQ up 19.2%. By comparison, S&P up by 20.7%. The Dow up by 15.5%. Broad-based rally. NASDAQ 100 index up 0.6%. Russell 2000 up 0.8. Dow Transports up also by 0.8%. 10-year yield 1.30%. We do have gold, the precious metal, little change, down 80 cents the ounce now. 18.12. West Texas Intermediate crude down 0.3, 68.31 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Bloomberg Business Week is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more.
Good to be back with you, Tim, by the way. We've been like back and forth doing different things.
I know. Well, we can enjoy it while we can, okay? Because there
a
will be
team.
some separation over the next few weeks.
We are a team, though. All right, let's get to the market drivers report. And let's set that Business Week agenda on this first day of September, on this Wednesday. Gina Martin Adams, as you know, Chief Equity Strategist at Bloomberg Intelligence. She's to my right in our Interactive Broker studio. To my left, Dave Wilson, Stocks Editor at Bloomberg News. And so, Dave, some more records here?
Yeah, well, it kind of looks like we're headed for one with the S&P 500. It's just relentless. We're be talking about the 54th this year.
Here, can I yawn on radio? Can you tell? Oh.
Yeah.
I'm sorry. Is the 54th potential S&P 500 record boring you?
No, because I'm a bull. Or maybe I don't know if I'm a bull, but, I like to see gains. Can I say that?
Hey, whatever.
Too late.
We'll leave that to Gina. In any case, I mean, it's, the interest rate sensitive stocks leading the way, real estate and utilities among the 11 main industry groups in the S&P 500, and big tech providing a lift, whether you're looking at technology specifically or communication services, where you find Google's owner Alphabet as well as Facebook, or the consumer discretionary category, home to Amazon.com and Tesla and a bunch of other stocks. Interesting, though, the more economically sensitive areas of the market are not exactly following along. I mean, energy stocks, the worst performers. Then you see financials, industrials, materials. So, kind of a split decision going on here, but it weighs in favor of another record for the S&P 500.
All kidding aside, Carol, I think you make a really good point, which is like, how much further does this keep going higher, right? If we think about where we are at the first day of September, we're 20% higher in the S&P 500 for the year.
And maybe I should say, because you often say this, Tina, there is no alternative. It feels like the U.S. is bouncing back before everybody else in terms of the developed economies. How do you see it in terms of the gains we've got so far?
Well, I think that Dave actually hit the nail on the head, and that is there's a lot of splitting between sectors, and sort of the signal in in the market that we derived out of August is, yes, stocks are still going higher because there is no alternative. Investors are definitely being drawn into the equity market and away from the bond market to a certain degree. But leadership is really splintered. We have no true consistent leader on the index, and to have leadership in defensive sectors like utilities and real estate.
What does that mean?
Is not a really big positive signal of investor confidence. So I think that is exactly what's happening. Investors are coming into the equity market, but not as a testament to some sort of surging optimism, more as a testament to the fact that there's not a lot of other places to go and still a tremendous amount of liquidity sloshing around. And if the Fed is not going to increase interest rates anytime soon, that's not going to change. So you've got tons of cash still sitting out there with nowhere to go on both corporate balance sheets as well as
It's got to go
household
somewhere
balance sheets.
ultimately.
It's got to go somewhere, and it's kind of working its way into the equity market.
Tim and I are frantically taking notes, as we always do, so that we have something to say in Beyond the Bell.
Yeah,
like as our Gina
Morton
Adams or Dave Wilson said.
Yeah. You too, Dave. Hey, we
Both
got
of them.
4 people in the studio. It's always fun. Hey, Dave, here we are. We do have a few more companies reporting earnings for the most recent quarter. It's interesting because we got this note, I think it was LPL Financial yesterday, reminding us that stocks are actually cheaper than they were because the way that earnings have essentially caught up, but investors haven't necessarily reacted by sending those shares higher.
Yeah, I mean, you're talking about a 25% gain in the S&P 500 this year, but think about the second quarter, 95% increase, something on that order for earnings. And, you look out to the third and the fourth quarters, I mean, you're not going to get a number like we saw last quarter, but, analysts are anticipating further growth and certainly above what we've seen historically. So it's not until next year that everything gets dicier because of, the pandemic and the recovery from the pandemic really kind of being factored into the mix more. So, you have to remember there are two sides to the price earnings equation. One is the price and the other is the earnings. So it's the relationship between the two that matters.
Well, and then you also have to think about economic growth. Gina, I mean, how do you forecast, or what are you thinking about as we get into the new year, 2022? You got to remember where we are in terms of what kind of growth we might get and what that means then for corporate earnings.
Yeah. So analysts are right now around 9% earnings growth, I believe, for the S&P 500 into 2022.
That's not terrible.
It's not terrible. It certainly isn't the high double-digit earnings growth that we've become accustomed to, and certainly the 95% growth in the second quarter.
Can we
will
say
be a
anomaly?
Top of all tops, right? So we know that growth rates will slow into 2022. I think there's still a question mark, really more about not that growth rates are slowing, but how much do they slow, and how will supply chains and inventories play into that? How will company margins behave is a huge question mark, because revenue growth is very strong, very stable, probably will slow a touch, but not tremendously. But how are companies contending with a lot of different inflation signals, much higher costs, supply chains that are still disrupted? That's going to be a big story for at least the first couple of quarters, I think.
Yeah, and so far, margins have been going up. That's the really interesting part, even as costs increase.
Well, PVH was a company that is flying today because it seemed to be able to skirt those supply chain issues. That's not the case, though, for every company.
It's not the case for every company, but it's the case for about 25% of the S&P 500, where we're seeing margin weakness come into the fore. So, and a lot of it's going to be case by case, industry by industry. I mean, I wouldn't be surprised to see us sitting here next summer saying, "Oh my gosh, we have all this supply on the market and demand can't keep up," right? Because we've got all this sort of bottlenecks coming,
I was going to say.
So there's going to be, I think, the volatility is probably the key word for what to expect in terms of both growth and the markets going forward. Is we've kind of suppressed volatility through this idyllic recovery and growth. That's not going to be the environment for the next 12 months.
You can come late to any party. You too, Dave Wilson. Just bring music. All right, Gina Martin Adams and Dave Wilson, thank you so much.
Let's do the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot. It's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
All right, Tim, today's number, 250 million. Checker is a tech platform for employment background checks. It has raised $250 million in a financing round that more than doubles its valuation from earlier this year. It's a San Francisco-based company valued at $4.6 billion with that new funding. According to a statement, the company said previously it was valued at $2.2 billion. That's a big jump then. Checker performs 30 million background checks a year for companies such as Uber.
Look at that.
Bet they're busy right now.
$4.6 billion.
That's a big jump.
That used to be a lot of money. Still is, I think.
I don't know what world you're living in. In my world, it's still a lot of money.
It still is a lot of money, of course. Let's get a check on the latest world and national news. Nancy Lyons standing by in D.C. Hey, Nance.
Hey, Tim.
Senior European Union officials say the Taliban's takeover of Afghanistan and the rushed airlift operation out of the country have both highlighted the EU's need for its own rapid reaction military force. Officials say the EU's dependence on U.S. troops during the evacuation demonstrated that the 27-nation bloc has a lack of preparedness and independence. Meanwhile, in Afghanistan, the Taliban and other Afghan leaders have reached a consensus on the formation of a new government and cabinet. Bloomberg's Amy Morris with more.
Taliban Supreme Commander Hibatullah Akhundzada will be the top leader of any governing council. Mullah Abdul Ghani Baradar is the main public face of the Taliban and is likely to be in charge of the daily functioning of the government. Now the UK is in talks with the Taliban to hold them to account for their actions in Afghanistan. A Taliban spokesman says they've reached a consensus with the outgoing Afghan government and will make a formal announcement introducing a cabinet and new government in a few days. In Washington, I'm Amy Morris, Bloomberg Radio.
Colorado's Attorney General Phil Weiser says a grand jury has indicted 3 officers and 2 paramedics in the death of Elijah McClain. The announcement comes 2 years after the 23-year-old black man was put in a chokehold and injected with a powerful sedative.
Each of the 5 defendants face 1 count of manslaughter and 1 count of criminally negligent homicide.
Weiser says his goal is to seek justice for Elijah McClain, for his family and his friends. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Massar, Tim Stanovic, back together again in our Interactive Brokers studio. A couple of stories, and we're going to talk a lot about Wall Street in just a few minutes, for the next 30 minutes, in fact. But there's a couple of stories about, well, first of all, let's talk about China. There are a booming, the country's seeing a booming hedge fund industry, and apparently it's paying $300,000 to beat Wall Street to some of its graduates. There is a hiring battle going on.
Yeah, it's interesting because we've talked about this so much here in the United States, and we've talked about especially first-year investment bankers and first-year analysts and the price war that we're seeing play out at Goldman and other firms.
And they keep upping it. I think it was at Morgan Stanley I saw today, upping it once again.
I can't keep track.
It's like an auction.
Oh, almost every day, every few days over the past 2 or 3 weeks, there have been more stories about. But that's that's the market at work,
yes.
right?
Yes.
That's the free market.
Supply and demand.
Exactly.
I mean, they're all competing for these workers, and especially when having the right players, having enough players, whether it's deal making, whether it's doing trading, you need the bodies in order to make the trades, do the deals, and ultimately boost your top and bottom lines.
Yeah, you do. There's another story that I wanted to get to. Speaking of Wall Street, the ex-Goldman trader building a unicorn after being denied a credit card. Russell Kalmer was a credit card trader at Goldman Sachs in Tokyo when he tried and failed to get a credit card. This is actually a common tale in Japan, especially for young people who don't have a credit history. His response was decidedly uncommon, though. He ended up forming a business to give people an alternative to cards.
Take that, credit card companies.
Yes, it's called Payday Inc.
Yes, backers include Soros Capital Management, also Visa. It's now one of the
take that cards, but also we'll take your money.
Frenemies. Isn't this how the world works?
Yeah, it is. It is. It really is.
It's one of the country's handful of unicorns. We're talking about Japan specifically, and unlisted startups with a valuation of at least $1 billion, among the largest players in Japan's buy now, pay later sector. That is something we are seeing increasingly take off, especially as people are maybe having a harder time paying down stuff.
Yeah, Square's acquisition of Afterpay in Australia, and in the news that we got late last week that Amazon was looking to team up with none other than Affirm. This is Bloomberg Radio, and this is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks holding close to records. We have got the S&P up 12 now, a gain of about 0.3%. Mega cap companies are rallying to highs as traders turn to defensive shares after the latest round of economic data suggests a slowdown in the labor market recovery. The NYSE FANG Plus index of pandemic darlings such as Apple and Amazon.com now up by about 1.7%. Specifically, Apple up now by 1.1%, Amazon up by 1.5%. S&P up 12, a gain of about 0.3%. The Dow up 2 points, little change now. NASDAQ is up 107, a gain of 0.7%. 10-years up 2/30 seconds, 10-year yield 1.30%. We do have gold trading little change, down 79 cents the ounce at $18.12. West Texas Intermediate crude flat now, $68.48 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We are up to date. There is a very important story on the Bloomberg today by our Max Abelson, who tracks the comings and goings of Wall Street firms, including its slow moves to recruit from black colleges, Tim.
Well, we're lucky to have Max Abelson, finance reporter for Bloomberg News, joining us live in the Bloomberg Interactive Brokers studio. Max, I think it's important to start with where these Wall Street banks were a little over a year ago after the murder of George Floyd, at the height of the Black Lives Matter movement, when we were seeing so much play out in the media, and these companies were being called on to be held liable for recruiting more from black colleges and universities. So where were we a year ago?
It was such a dramatic moment, and it's a little surreal, honestly, thinking that it was just 1 year ago. Carol and I were just talking about it. It feels like another epoch. But to go back to it, you know, it was really this moment across corporate America, and certainly across the financial industry, which is what I write about, where we saw some of the biggest companies in the world saying, you know, we get it, and we're not going to stand by. We're going to play a role in fixing and healing systemic racism. And what the banks all did is a couple of things. One is that they they pledged a lot of money. They pledged a lot of money, and they also said, here are some concrete things we're going to do.
What does it mean when they pledge? Like, what did they pledge money to?
Oh, huge amounts. You know, you saw things like, to stick to this subject, things like big scholarships to historically black schools. Okay. And that's a subject today that I'm writing about. So one of the big concrete things, Carol, is that they said, we're going to support historically black colleges and universities. There are about 100 of them. Mm-hmm. Listeners might recognize names like Howard, Spelman, but there are dozens and dozens of them across America, a really sort of interesting, rich source of young black talent for decades. And what our story is about, my story is about, I should say, is I tracked the data to take a look at how the big banks are doing when it comes to recruiting from these schools.
And sounds like they're not doing so well.
Well, look, I mean, I think it's important to give credit to where it's due. And, you know, Goldman Sachs, for example, have a lot more interns this year than last year when it comes to HBCUs. And that's great, almost doubling.
But as you point out, internships are only part of the story.
That is right. So if internship is the good news, the slower progress for Goldman, and it's a good metaphor for the industry as well, you know, they went from having, I think, something along the lines of 22 HBCU hires, and then they, you know, it's up, but only to 25. Now, you know, their goal is to double recruitment. And, you know, I would say the closest thing I got to bleak news while reporting the story was that at JP Morgan, HBCU recruitment actually fell from 1 year to the next. But I think another important piece of context is that when you look at all kinds of campuses, not just historically black colleges, the numbers of black recruits did go up at JP Morgan.
So net, is there a net in terms of, are they doing better? Or they're just not going fast enough? And I'm curious what the firms tell you about this process.
The sense that I got from speaking to students and from speaking to banks was, you know, it's actually two different things. Let's separate them out because it's interesting. From the banks, what I heard was, look, this is going to take a long time. We truly care about it. And we're happy to be making progress, even if it's so far slow. And I think it's also important to remember that because of recruiting schedules, if they started big programs after George Floyd's murder, it's probably fair to be a little patient and see what happens next year with those numbers. But you know that Bloomberg News will be on it and will be trying to figure out if those numbers are not going up. But let's talk about those students, what I heard from students, because I had a really interesting time talking to, for example, young women at Spelman who, want to be part of changing this industry.
What did they tell you?
Well, I would say there's a certain enthusiasm where they really like finance and they want to help cultivate Black wealth. But I think there's also a sense that, they're not naive, that they recognize that they will be walking into offices that are not like college for them, where the faces around them and the faces above them don't necessarily look like theirs.
Right.
Well, go ahead, Carol.
Well, and you mentioned Spelman, so you're talking about Alex Jenkins.
Alex Jenkins, she was great. But, I think I might have spoken to maybe half a dozen young women at Spelman, Anissa Thomas as well. They, I think really consistently, they really enjoyed getting to know Wall Street. Goldman Sachs had a competition for HBCUs called Market Madness. They all were super enthusiastic about.
Right.
And, as you pointed out, it's a really important point. They need to get into the door through internships, and then they need to get hired. But the next big piece of the puzzle is retention.
I was just going to bring that point up. What are the companies that you speak to doing about retention?
It's a complicated question. I think the banks know about it,
right.
And I think the students realize it. I think the students realize that when they get in there, it's going to take real thoughtfulness for how to build careers in an industry where, realistically, the top executives of these banks, just like top executives of a lot of American companies, mostly white and mostly male, but the banks say that they understand and they're working on programs to keep them. I want to mention someone really interesting I met named Angel Caston. She was a mentor for that Market Madness program that I mentioned, and she's an HBCU graduate herself. But by the end of that competition, she had basically left the firm. I think it was sometime around this year. She said to me, "Look, I was burned out on Wall Street culture," and I think that fixing this problem is going to take a lot of time, but the banks that I talked to said that they know that and that they're in it for the long haul.
Yeah, well, like you said, the numbers tell the story in a big way, and I know you guys will be continuing to track it. Max, thank you so much. Really appreciate you bringing the story. Max Abelson, he's finance reporter at Bloomberg News. Check out his work on Twitter at Max Abelson. You can also check it out at Bloomberg.com.
Yeah, the story's called Wall Street Moving Slowly on Road to Recruit from Black Colleges. It's on Bloomberg.com and, of course, on the Bloomberg terminal as well.
You are listening to Bloomberg Business Week. Carol Massar, Tim Stanovic, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Did you hear that, Tim?
Yeah, I do. What is it?
It's Wall Street South.
Oh, that's what it is.
Come
You know what?
to Florida.
If you're kind of on the fence about going to Florida, you're going to miss New York a little too much. Well, a lot of people there are taking notice, and they're trying to bring more of New York to what they're calling South Wall. What are they calling it?
Wall Street South.
Wall Street South.
I think that's what
I haven't been yet.
Is there a Statue of Liberty there?
It's not Las Vegas.
All right, and it doesn't have Charlie Pellet. At least
doesn't.
Not yet. Hey, Charlie.
Way. No way. I love New York. What can I tell you? Here's what's going on. Let's get right to the markets. We got ourselves a busy Wednesday here. Robinhood Markets working on a new feature that lets users get their paychecks via direct deposit up to 2 days early, stepping up competition with companies like PayPal and Wealthfront. Robinhood shares, they're pushing higher now. HOOD on the ticker there, up by 1.5%. Workhorse shares, they're lower after Dow Jones reported that the SEC has opened an investigation into the company. Some of the other stories that we're following for you today: Apple asking all American employees to report their vaccination status, marking the latest move in a COVID-19 campaign that has stopped short of mandating shots. Apple shares, they're up now by 0.9%. Lots of questions in the medical community about booster shots. Bhakti Hansadi is Associate Professor of Emergency Medicine at the Johns Hopkins Bloomberg School of Public Health, and she says it is going to be a case of when and not if.
So you absolutely will need a booster. The question has never been, will we need a booster, right? With viruses that mutate, like change over time, which we know boosters are necessary. Now the question is, when do we need a booster? When you have a global supply chain shortage, should we be prioritizing boosters or unvaccinated individuals? Who should be getting boosters, and what the dose of that booster is?
Dr. Hansadi with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine stocks that we follow, Pfizer shares, they're down 0.7%. Its German partner BioNTech, the ADR, is up 0.7%. AstraZeneca up 0.6%. Moderna out of Cambridge surging 4% today. J&J, Johnson & Johnson up 0.1%. Mega cap stocks are rallying to a record today. Traders turning to defensive shares after the latest round of economic data suggests a slowdown in the labor market recovery. The Dow just turning lower, down 7 now. S&P at a record, up 8, higher by 0.2%. Nasdaq up 86, up 0.6. 10-year yield 1.30%. Gold flat on the day, 18.13 the ounce, down 42 cents. West Texas Intermediate crude little change, down 5 cents now, 68.45 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So this story, it is among our most read on the Bloomberg today. And Tim, they've gone south. We're talking about a growing number of Wall Streeters, particularly among the older set. So there are some attempts to bring in a younger crowd.
Yeah, if potentially you're on the fence about getting down there and moving to New York, maybe pulling your kids out of or moving from New York, maybe pulling your kids out of school, or it doesn't have the amenities that you are used to here in New York. Well, South Florida is trying to change that. Amanda Gordon is a reporter for Bloomberg News' Wealth team. She's with us in the Bloomberg Interactive Broker Studio. Amanda, you're not in Florida right now.
She looks like she should be, though.
That's what the surprise to me is. How much? So, okay, really, though, you've joined us for a lot of stories in the last few months that have taken place down in Florida, and I really think that speaks to the draw and what's happening. What's going on in Florida to try to lure New Yorkers? Because I didn't know they needed luring. The story has been, hey, this is where the action is.
Well, we do know that New York is the center of the universe. I just want to make clear.
Thank you for the reminder. I agree.
And West Palm Beach is not the only city that tries to do New York type things. You know, an apartment building might be called, the Bedford or the Houston to reference, New York City neighborhoods in St. Louis or Seattle. But in West Palm Beach, there is a pretty concerted effort of real estate developers. So people with financial interests in seeing that community rise are looking for ways to make it feel comfortable for people from New York. And we've seen COVID accelerate the interest and migration, some of it temporary, maybe some of it not. So for me on my beat, I actually have been spending more time in Florida. And even when I'm in New York, it's just, someone said recently at a party in the Hamptons, now it's an 8-lane highway between the two places. Wow. And there's just a lot of conversation and interest in what's happening there and what's happening here. So that's just to say, the story is not saying that New York is not, it's on its own finding a way back to its bustle and its mojo. And, you know, a restaurant like Harry's opening in West Palm Beach doesn't mean that Wall Street South has arrived. It's nascent, and it's very exciting to follow something that is really just beginning in a smaller city.
It's like getting its southern best friend or something like that. I mean, right? So it's developing. Talk to us, because there's some developers. You mentioned Steve Ross, who's down there. I mean, there are a lot of well-known New Yorkers, right, that have really created some impressive developments down there. Tell us some of what you saw, because you spent some time there recently.
Yes. So the one of the more exciting projects is by a young guy who had lived in New York through his 20s, and he's bought a portion of parcels, historic buildings, in really a not good area of town. That's a little bit outside the city center where Related has so many properties, right, and buildings going up. And he calls it Nora, and that's for north of Railroad Avenue. His name is Ned Grace, and he's teamed up with folks behind Wynwood in Miami to imagine one destination with a mix of restaurants and shops and living spaces that I think really appeal to that young, urban, affluent person.
Well, and I think about, because some of the developments that have happened even in the New York metro area, where it's like you can live, you can work, you can shop, you can eat, right? Really thinking about the people who live in a community, making sure there's everything that they want there. And I feel like a younger generation in general wants it, like it's the ease of everything being kind of nearby.
Well, when I set out to work on this story with my colleagues, I really made a priority to talk to people who have recently moved from New York to West Palm Beach and are finding their way. And one of the things they say is that they're so used to walking and they stick out like sore thumbs for doing so. And the old timers will say that they're really working on making the city more walkable. And if there are more stores, more people, that becomes a reality.
Hey, Amanda, we only have 20 seconds left for this. Not enough time. You're going to have to come back. Climate change. You mentioned this in your story. Here we are in between tropical storms right now. Katie, Larry, Ida, I can't keep track. How is that being factored into the move, just in 20 seconds?
Well, I would just say that, West Palm Beach has a lot of challenges, and the waterfront development and the house prices rising, those are very vulnerable areas. The fact is that there are poorer communities inland that are in much worse shape. They're not going to have the chance to run back to New York. And this is a big issue that this city will face.
Yeah, that and many other cities that are along the coastal line. Amanda Gordon, always nice to have you here and great to have you in studio. Thank you. Really appreciate it. She is reporter for the Bloomberg News Wealth Team. Check her out on Twitter and also at Bloomberg.com.
Well, let's get to check the latest world and national news. Nancy Lyons is standing by in D.C. Hey, Nance.
Hey, Tim. Some good news to report on the COVID front. U.S. health officials say hospital admissions of COVID-19 patients are declining for the first time since late June. It's a possible sign that the recent surge is waning. The 7-day average of new admissions has fallen 2.4% in the past week. Falling numbers in like hotspots, Florida and Texas are driving those improvements, but some rural parts of the country, in West Virginia and the Great Plains, for instance, are still seeing sharp rises, even with rates down in cities, so there's no guarantee these improvements will last. Recent worries about the coronavirus have resulted in more vaccine mandates in the workplace.
A survey by Willis Towers Watson finds a slim majority of U.S. employers, 52%, are planning or thinking about requiring COVID shots by the end of this year. That's more than double the 21% of companies that already have some form of mandate. Options vary from strict orders for all employees to get their shots to limiting access to certain areas to inoculated workers. About 14% of companies also say they're considering healthcare surcharges for people who choose not to get the shot. In Washington, I'm Nathan Hager, Bloomberg Radio.
Heading out of town for Labor Day weekend could cost Americans more at the pump. Gas prices keep rising toward what could be the highest Labor Day weekend prices in 7 years. Today's AAA survey of stations shows the national average regular is up $3.17.4 a gallon. That's 1.5 cents higher than Tuesday's average. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar, Tim Stanovic in our Interactive Brokers studio on this Wednesday, the first day of September.
Oh, you know what that means, Carol?
It means it's time to get out there running and working and taking care of your health if you haven't already.
I was going to say it's Apple device season. Really, this is the time traditionally. It is.
Mark Gurman was saying this is like when we get all the details about like the new devices soon, right?
Soon, and it's trickling out. Mark Gurman has had a ton of great scoops about what's been happening at Apple. And there's another scoop today, this one in the Wall Street Journal, Dow Jones, reporting that Apple is working on a new health-related feature for the smartwatch. This one, a blood pressure monitor and a wrist thermometer for the watch. That's according to Dow Jones.
This is great. This is what I need on my Apple Watch.
Well, which generation Apple Watch do you have?
It's only the second generation. It's,
So
it's probably, everybody's like, time to probably get a new one.
Well, that's what Apple would want you to do. What
I
they
have
do is
thought about it, that maybe it's time.
Well, do you use any of the health tracking features?
Not a lot.
really, yeah.
I do like sometimes the walking, and that kind of thing,
can
and
get that
track
on your
it.
phone.
All right, shut up. But I do like it. I have made phone calls and stuff. I think we will, maybe I'm not supposed to give my opinion, but I do think as a society, the pandemic, we really are thinking much more about our health and our wellness. Unfortunately, the Apple Watch, personally, I'm going to say I like it. I think it's a great device, but I think increasingly we want more information about our health, and this kind of makes sense. It's where the world seems to be going.
It does, and Apple wants to be the company that you trust, that consumers trust their information with. The company has for years been marketing itself as a privacy-focused company, and increasingly I think a big part of that has to do with the data with regard to health and its ambitions that it has in health. And the company has for years worked on adding these incremental health features and building out Apple Health. And even Steve Jobs, I never forget this, in the Walter Isaacson biography of Steve Jobs, one of the areas that he said, look, more than a decade ago that Apple needed to get into was healthcare. And this is another step toward that direction.
I do see that there could be a time, and I think you're already starting to see maybe companies who give, breaks on health clubs and things like that. And is it such a big step to go to something like a wearable or an Apple Watch?
This might get me to get it.
Yeah, okay. Then we can talk to each other on our...
I know. We don't have enough ways to talk to each other, right?
This is Bloomberg.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks well off session highs. We are still, however, looking at records on both the S&P 500 index and the NASDAQ Composite Index. Mega cap stocks rallying to records as traders turn to defensive shares ahead of the latest round of economic data, or after the latest round of economic data suggests a slowdown in the labor market recovery. Tomorrow morning, we will be getting the first-time jobless claims data. Friday morning, of course, the all-important jobs report. S&P right now up 6, again a record there, up by about 0.1%. The Dow on the minus side, down 21, down 0.1%. NASDAQ up 77, up 0.5. 10-year up 2/32, 10-year yield 1.30%. Bottom line, though, we are well off session highs. The NYSE FANG Plus index of pandemic darlings such as Apple and Amazon up more than 1.6% right now. Apple shares pushing higher. Apple is up now by 0.9%. Amazon shares up by 1%. Gold down 48 cents the ounce at $18.13. West Texas Intermediate crude lower a little change, down 4 cents, $68.46 a barrel. Recapping, S&P at a record up 7, up 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So this week, it's a special double issue of Bloomberg Business Week magazine's deep dive into the world's cities, looking around the globe through several different lenses. It's a great summer read, and we're going to get an overview of that issue.
Joining us now is Amanda Colson-Hurley, politics editor at Bloomberg Business Week. She's joining us on the phone from Washington, D.C. We got a handful of stories that we want to get to. The one that I really want to start with, Amanda, it's the cover this week, and it's all about Mark Lorry's desire to build a utopian megapolis in
Say
the
that
American
5 times
West.
fast.
Well, I probably didn't even say it correctly, but 5 million
It's a tough
people.
one.
5 million people somewhere in the American West, a Georgian utopia. Take us into what Lorry wants to do. This is a guy who founded Diapers.com and sold it to Amazon for hundreds of millions of dollars, and then sold Jet.com a few years ago to Walmart for
Hate these
billions of dollars.
underachievers, you know,
I know.
Amanda?
Yeah, he's a successful guy.
Yeah, so this is a great cover story and just a great story about how Lorry, like a lot of other people in the tech world, has gotten the city building or city planning bug, and really has this vision of not only building this city from scratch that would eventually have 5 million people, but structuring it on the economic ideas of Henry George, who was a thinker in the 19th century. And in the process, the city, in Lorry's vision, would kind of save capitalism from itself. It would, reduce inequality and produce a society, an egalitarian society. He's not, and he admits in the story, he's not super clear on the details yet, still working through a lot about how this city would be governed, even where it would be located. They're looking at sites in the American West, but it's not even clear what state it would be in.
I got to tell you.
He's hired a team, an
Yeah.
architect, and he's pretty serious about it, yeah.
Okay, well, I got one word as a Californian. Water. That is the challenge right now in the American West. It's sadly, but it's true.
Yeah, I mean, that's just the beginning of all of the issues that, he would have to grapple with, if and when, his team actually decides on a site and really starts to get down to the brass tacks of planning. But, I think that we can kind of put this plan in the context of, I think, a lot of other efforts toward, hacking the city or building a better city, using technology and innovative ideas that have come out of Silicon Valley. A lot of them have run into roadblocks, I think, that proved more complicated than initially expected. I'm thinking of the Quayside plan in Toronto by Alphabet, I believe, that was scuppered not that long ago. So.
Well, Amanda, I think we talk about the importance of public-private partnerships. This feels like a public-private partnership, ultimately on steroids, leaning more towards the private. So it's curious. We'll have to see where it goes. In the meantime, when you talk about cities, you got to talk about China, and you got to talk about those ghost cities, which for a long time, a lot of folks who were short China, specifically because some of those ghost cities, are they really as deserted as we all have believed them to be, or maybe that's not the case?
Well, that's the question that led us to do some reporting because, we all remembered, especially about, 7, 8 years ago, there was a whole wave of coverage in Western media of these ghost cities. A lot of viral photos online of these empty apartment towers. And the implication always was that, China has really made a mistake here. These places are overbuilt. If you build it, people won't come, right? That's not enough. And our reporters went and found, these places are not all booming metropolises, but people are moving in. They are coming to life. And in some cases, Bloomberg reporters had actually visited these same cities a number of years ago, so they were returning and were able to kind of compare their experiences to their earlier visits and found that things were much more lively. There were more private businesses, just more people around, families strolling in the square, kids playing, small businesses taking root. So I think these ghost cities, some of them, might not quite meet the original goals that they had been built with, but these are not ghost towns by any means.
Well, and you do think about President Xi, his common prosperity. If he's looking to maybe bring more people from the rural areas into the cities, that ultimately they could be populated as he tries to kind of boost everybody economically. So it feels like it's still stay tuned to see what ultimately happens.
Definitely, yeah. As urbanization increases in China, presumably there's still a large and growing pool of future residents of these cities.
This one hit really close to home. A third story that I want to talk about in the cities issue.
Could you turn off the city, please?
I know. Sometimes I'm on the phone with my parents or something or friends, and I'm like, I got to just call you back because there's an ambulance right here. There's a highway right here. There's some person screaming right here.
The normal din.
How do you make cities quieter and therefore increase quality of life? Because people want to live in them, sometimes regardless of how loud they are.
Yeah, that's right. And this we have this great essay in the issue about sound in cities, and it kind of starts with the fact that cities did get somewhat quieter during the pandemic, and yet noise complaints, largely did not decrease, which tells you something, right? In that a lot of the time people weren't commuting into work, they were staying at home. And then their neighbor turns on a leaf blower or something, and you think, okay, it's going to be so much quieter in the suburbs or, in a residential neighborhood than in Times Square. And that's not really the case, or perhaps it's quieter, but, that neighborhood noise is every bit as annoying, if not more so. So our writer, Fergus O'Sullivan, tried to kind of dive into what it is about urban noise that bothers us or pleases us the most, and kind of found that often it's not just about the volume. It's it's about the kind of overall effect. It varies a lot from place to place. What might be considered pleasant or annoying in China, might not be the same in Phoenix. And he kind of talks about the importance too of layering sound instead of. You're never going to get rid of urban noise, but you can do things to make it more pleasant.
Well, it's a great read. I got to say it. When it gets too quiet in my city, I get a little nervous. I like a little bit of noise. Amanda Coulson-Hurley, politics editor at Business Week. It's the issue this week. It is all about cities. Check it out. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Wednesday, September 1st. We've got stocks at a record, the Dow lower, S&P up 6 right now, higher by 0.1%, NASDAQ up 78, up 0.5%. The Dow, though, lower by 24 points, down 0.1%. Mega cap companies rallying to records as traders turn to defensive shares after the latest round of economic data suggests a slowdown in the labor market recovery. 10-year up 2/32, 10-year yield 1.30%. The payroll provider ADP reports American businesses added just 374,000 jobs in August. That was well below Wall Street forecasts. As for the economic backdrop and the Federal Reserve, Noel Coram is portfolio manager at Invesco.
Growth is good. Policy is going to be dependent longer term. Powell made it very clear on Friday that the longer term standard for tightening is much higher than the standard for tapering. So it's going to really come down to inflation and the messiness of inflation, and they're not going to be confident for some time.
And speaking of jobs, Amazon says it plans to add more than 40,000 people to its corporate ranks in the U.S., a hiring spree the company is calling its biggest ever recruiting and training event. Amazon shares up right now by 0.8%. OPEC and its allies have agreed to stick to their existing plan for gradual monthly oil production increases after a brief video conference. Among some of the oil names we follow, right now we have ExxonMobil down 1.5%. BP down 0.5%. Chevron shares, they are lower by 1.1%. EOG Resources down 1.7%. Pioneer Natural lower by 1.3%. Crude oil virtually flat on the day, up 1 cent right now, 68.51 a barrel. Gold down 30 cents the ounce. I'm Charlie Pellet. That's a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I'm going to try and maybe channel an SNL skit. No, I'm not, because I'm really bad at this. But calling all you pot smokers. Can I do that?
I think you can. But this, this story, it's a story about Amazon. It's also a story about
it's a rallying cry, Tim Stenovic. Come on, just lean in on this.
I love this story. I was emailing with Spencer Soper a little earlier, and the fact of the matter is it is a really important story about the tension between supply and demand when it comes to the labor market right now. Something that we've been talking about all week.
Tension? Yeah. Maybe you should have a joint.
Well, you're just going all in.
I'm just going all in.
She's going all in.
All right, let's bring in Spencer Soper. He's our Bloomberg News technology and e-commerce reporter. He wrote this story. He's on the phone in Seattle. Man, when this story crossed, we were all just talking about it in the newsroom. Spencer, it's good to have you
How early
here.
is too early to call Spencer on the West Coast to just get him on the radio so we can talk to him about this?
Are you awake?
Yeah, definitely.
Okay.
No, I haven't been downwind of any Amazon vans, so I'm good.
Okay, we just need you for a few minutes to tell the story, and then you can go off and do whatever you want. So what's going on with Amazon?
Yeah, well, so Amazon stopped screening for marijuana, for its own workers back in June. It made that announcement, and what's happening now is, we're heading into this is the time of year when Amazon and its delivery partners prepare for the peak holiday season. They're doing lots of hiring and that sort of thing. And these delivery partners, these are small businesses that deliver Amazon packages in those blue vans people see in all their neighborhoods. They're having a really hard time finding workers, just recruiting people, getting them to take the jobs, getting them to stay once they're hired. And so Amazon's advice to them is, recruit pot smokers. So if you prominently advertise in your job listings that you don't screen for marijuana, Amazon's advising them that they could see the number of applications they receive rise by as much as 400%, which sounds very, like a really big number. And that if they do screen for marijuana, they're going to cut the prospective worker pool by up to 30%. So it's a clear sign that Amazon's trying to encourage these business partners to get with the times and follow the trend of legalization of marijuana around the country. It's recreational marijuana use is legal in about 20 states, including a lot of big ones like California, New York, that sort of thing. Still illegal in a lot of states, so that's what makes some of these delivery businesses a little bit wary about taking this step.
So is Amazon telling its delivery partners that even in states where it's not recreationally legal, that they shouldn't say they're going to screen for this?
Yeah, the advice has gone out pretty universally, and I guess in fairness, you might live in a state next to a state where it's legal, or even take a trip to somewhere where it's legal, because marijuana can really linger in your system for a long time, long after your impairment is diminished. So even after you regain all your faculties and are safe to drive, you're still going to have traces of marijuana in your system. And so that's really the point that they're making. But that's a very good point in terms of the delivery providers that operate in states where it's illegal. They're very worried if they have a driver in a crash with injuries or that kills somebody or something, and they test positive for marijuana, that they're going to face a lot of questions from a lawyer about their job screening process.
Right. That, as you have a quote in the story, that's their problem, right? Not Amazon's, if that happens.
Yeah, because these companies are employing the drivers themselves, not Amazon. So Amazon dictates all kinds of things, but there is a liability layer there in the sense that these people are employees of a separate company.
We're having some fun with you, Spencer, about it because it's just, the headline on it is great. But, I mean, Amazon's got to be thinking about the holiday season already and making sure that they've got enough drivers in what we know is always a busy season for them.
Yeah, I mean, finding enough people is always a challenge for Amazon. And then it just became intensified during the pandemic when, we just saw so much spending shift online. And a lot of that is lingering. Even though growth is slowing, it's still staying there. It's not really peeling back. So it's going to be another tough year just for Amazon to find enough bodies to meet demand. And this is one way to just expand the labor pool. It's kind of like, all right, let's look at the supply side of this, and not screening for marijuana is a good way to increase the supply.
Hey, Spencer, I was thinking about this the other day because I sent a package to a friend of mine across the country using a traditional delivery service. It was $14, and it was a tiny package. And I thought to myself, wow, how is Amazon able to send me packages from all over the country or from distribution centers in the same day close to my apartment for free? How much are these drivers making?
A lot of these drivers, it'll vary by geography, obviously, but at least 15 an hour. And it seems like the average seems to fall somewhere around 17. Maybe a little more like 18, 19 in high cost areas, and a little less in lower cost areas. And then to your point, it's always been that way. Like, you as a retail customer going in just to send one individual package, it's going to cost you a lot more money than a business that's got a constant stream of packages. You're going to get very big, volume discounts, from carriers. So you're always paying a lot more. Like what you paid to send one little thing is not representative at all of the cost of a big retailer shipping individual packages.
As you point out in your piece, I mean, Amazon increasingly doing this themselves, whether it's their own fleet of aircraft or this army of delivery drivers that they have that are independent contractors.
Yeah, they're taking on more and more on their own, and that's why they need to find more workers. And the counter here is that a lot of these delivery providers, what they're pleading with Amazon, saying, we can't find people. Please pay us more so we can pay drivers more and get the bodies we need. And Amazon's answer is like, forget all that. Just hire some pot smokers.
See,
that is the perfect summation of the story.
We got to end there. Spencer Soper, thank you so much. He is technology and e-commerce reporter at Bloomberg News. All things Amazon on the phone from Seattle. What?
I got to meet Spencer in person a few weeks ago when I was in Texas.
You guys were just like bros, right?
Oh, it was awesome. Yeah, it was awesome. I love being able to travel and meet colleagues from all over the country. People I've spoken to for a year, or like interviewed on TV or on radio. Finally finally getting to hang out with him, we had a lot of fun.
He's a good guy, and his stuff when it comes to Amazon is always a must-read, just kind of getting some great insight into what they are up to. All right, you are listening to Bloomberg Business Week. Let's get back to world and national news, and Nancy Lyons. She is in our 99.1 newsroom in the nation's capital. Hey, Nance.
Hey, Carol. President Biden is meeting today with Ukraine's president and offering a firm commitment to Ukraine's sovereignty in the face of Russian aggression. Volodymyr Zelensky thanked Biden for U.S. donations of coronavirus vaccines and a new $60 million package of security aid. Thousands of Afghan refugees are en route to the U.S. for resettlement and to other way stations around the world that the U.S. has arranged. But what are the long-term plans for them?
The influx of refugees from war-torn Iraq and Syria created political issues in Europe. Resettlement of Afghans will now have to be negotiated by American diplomacy, former State Department official Robert Hormat said in a Bloomberg interview.
This is going to be a very big issue in American politics, and we have just begun to recognize this. They're now in temporary quarters, but we've got to find long-term homes for a lot of these people, and we're going to have to work with the allies to do it.
Hormat said at the same time the allies and Afghanistan's neighbors will have to consult on how to deal with the Taliban. In Washington, Irv Chapman, Bloomberg Radio.
The lights are coming back on for some residents in New Orleans after Hurricane Ida left a path of destruction. Mayor LaToya Cantrell offering some good news.
Some parts of New Orleans East started to see power as early as 1 a.m. This morning. Again, we do anticipate additional progress there, but it will be gradual.
Cantrell says right now they're trying to get people the necessities until all the power comes back. President Biden will be traveling to New Orleans on Friday to survey the damage. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Great, Nance. Thank you so much. So, Tim, every day we come in and there's usually a bunch of headlines, certainly about COVID, what's going on in terms of cases, hospitalizations around the globe, also about the vaccine.
Yeah, specifically here in the United States, at least, where we are lucky enough to have widespread availability for the two-shot vaccine as well as for the one shot from Johnson & Johnson. Pfizer booster shot lowered coronavirus infection in a new study. A third shot of the Pfizer-BioNTech COVID vaccine provides added protection, Carol, against the coronavirus during a Delta outbreak. This is according to early data that came from Israel, where boosters began rolling out incrementally. That was all the way back in mid-July.
All right, so here are some of the numbers. People who received the supplemental dose had a 48% to 68% lower risk of infection a week to 13 days later compared to those who got the standard two-dose regimen. That's preliminary analysis of data from the Maccabi Healthcare Services. Now, the protection increased with time with a 70% to 84% reduced risk of testing positive 2 weeks to 20 days after getting a third shot. There's lots of studies being done right now, and I think part of it is kind of making it a little bit of a murky picture about boosters, but we're trying to figure that out.
When do we get them? Are
Right.
they different for Pfizer and Moderna?
Right.
Are they different for people who got the J&J shot? Do people who got 2 shots of Pfizer get a booster of Moderna, and vice versa? Coming from people who got Moderna, do they get a shot of Pfizer?
It's a lot.
It's exhausting.
It is exhausting. And so that is what, regulators, people who are doing studies, the medical community are trying to figure out so that when is the right time to give the booster? Who does it make sense for? So that's going on here. At the same time, this story kind of freaked me out by our Jason Gale here at Bloomberg. Painless silent organ damage is seen in a large long hauler study. We've talked about long haulers over the last year and a half. This is pretty serious.
Yeah, I don't think it's something that gets enough attention in terms of metrics. We talk about deaths, we talk about hospitalizations, and we talk about infections. But there are many people who have been infected with COVID that are so-called long haulers. And new research is saying that kidney damage is painless and silent, and it's the latest ailment to be identified in a large swath of COVID-19 survivors.
As we say every day, new headlines and new things that we're learning. You are listening to Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. Stocks are holding at records. However, we are well off session highs. Lots going on. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks have faded from those morning highs, with the Dow now down 27 points. S&Ps are higher by 6. NASDAQ climbs by 79. The U.S. 10-year yield at 1.3%. Gold is little change. Transports gain 87. And among the main 11 SP sectors, leaders were real estate and the utilities. Energy was under pressure. The leaders to the upside in the Dow, Salesforce and Disney. Caterpillar and Amgen led to the downside. And in deal news, Kansas City Southern said that Canadian Pacific reaffirmed its interest in acquiring the company. And in other news, Robinhood plans an early deposit feature that rivals PayPal as well as the banks. And the SEC opened an investigation into Workforce Group. Wrapping things up, C3 AI reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over at your Bloomberg Type Squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So Tim and I just talked for some of our audience about some of the COVID headlines that are out there. One that caught my attention is a majority of U.S. employers are planning or considering requirements for a COVID shot by year end. Tim, we continue to see momentum. And on that, we had a story today about Apple asking all U.S. employees to report their vaccination status.
Hey, send it to us. Tell us if you've gotten vaccinated and when you got vaccinated. It's increasingly something I think we're going to see more and more of, especially, Carol, as you and I were talking about during the break. Pfizer has received full approval for its 2-shot vaccine here. So I think companies like Delta, for example, are thinking differently about to what extent they can actually compel their employees in different ways
Carrot
to get
and stick,
vaccinated.
right? We talked about that.
Yeah, that one's a stick.
All right, let's talk about the latest news when it comes to COVID and the vaccine. Dr. Rachel Eva-Dew, she's co-founder and CEO of Modi Health, back with us on the phone from Los Angeles. Dr. Dew, nice to have you back. Modi, for those who don't remember, platform that offers live telemedicine, telewellness consultations, and other tools when it comes to health and wellness. How are you? What's going on?
I'm wonderful, Carol. Nice to be back with you and Tim. Thanks for having me again. I'm doing fantastic.
It's really good to have you back with us, Dr. Dew. Since we last spoke, what are you seeing in terms of vaccine uptake from people who are in touch with your practice? Is it pretty widespread that people are getting vaccinated?
Absolutely. Now, at Modi Health, we're a community of integrative specialists, and what we're really seeing as the pandemic continues and more people continue to get vaccinated is that there's a significant increase in interest in preventative care and also people's desire to proactively prevent illness and increase health, even on the other side of vaccines. And really the most common question we're getting right now is, how can I support my immune system better?
How can you? Tell us, share. We all want to know.
Absolutely. Sure. We suggest keeping your immunity healthy and really a top priority with reducing stress, increasing healthy nutrition and daily exercise, as well as reducing things that negatively impact the immune system. Things like poor sleep hygiene, processed foods, alcohol intake, and refined sugar. So those are a few easy steps you can take.
Okay. Easy is in the, eye of the beholder, right?
Tim and I were like looking at yourself like, don't cut that.
Yeah, sleep, easier said than done. Carol and I were just talking about during one of the breaks, like how we monitor sleep, because we were talking about the Apple Watch that's coming out. But let's start with just something that people can control, or I think that people don't think they can control very well. And that was the first thing that you said, which was stress. What is the advice that you have for people who are just kind of overwhelmed with the way things are right now? How do they take a step back and try to reduce that stress so their immune system is not affected?
Beautiful question. I think the first step is really acknowledging that this has been a really stressful time, and the impacts, even unconsciously, of all of the media, all of the experiences, all of the shifts in social connection or transitions we've made in the workplace during the pandemic have definitely led to stress, whether you're aware of it or not. So the first thing is really acknowledging that, yes, there is an increase in stress. and just allowing yourself space and time to process that. Maybe that's taking, 15-minute break to just step outside and take some deep breaths, or scheduling in a little extra self-care time or relaxation, but really acknowledging and creating the space to address that stress is a priority.
I do also wonder how we need to kind of think about how we do our own self-care when it comes to checkups and monitoring of our actual physical health, right? If you're good, right, you hopefully once a year go get a physical and you check everything out. You go to the eye doctor, you are good with the dental work and all that kind of thing. You guys have a concierge membership, and I'm just curious how you are thinking about healthcare and how best to help people really keep on top of their wellness so that they don't get sick.
Absolutely. I think we're starting to see that shift being more prevalent now from the concept of sick care to well care. And, the World Health Organization really defines health as a state of complete physical, mental, and social well-being, and not just, the absence of disease or infirmity. So whole person healthcare is both a holistic and integrative approach that looks at the whole person, identifies the root cause of illness, and really supports healing as a way of, preventative wellness measures. And that does not only just limit you getting sick and having health crises, but really increases and optimizes your health and well-being. So that's what our concierge health membership really focuses on.
Give us a percentage over of how much you can do over telehealth versus in person with this.
Oh, absolutely. I think that it's important to know that telehealth should not fully replace in-person care. There's a beautiful marriage of the two. Getting diagnostic lab work is still critically important. Having physical hands-on exams are still important. And those typically during well care or your prevention can absolutely be things like Carol mentioned about your once-a-year physical lab work, things of that nature. But primarily, the rest of your care, your more holistic care and treatment, ongoing preventative wellness, check-ins, checkups, mental health, wellness, life coaching, health coaching, all of those things can be done very effectively via telemedicine and telewellness sessions.
Yeah, it just sounds like it's another thing that we just have to kind of regularly have, like you go to get a massage or something, like just kind of work it into...
I get a regular massage.
I know. I keep saying that. Here I am a year and a half later. Dr. Du, thank you so much. Dr. Rachel Du, she's board-certified doctor of natural medicine, chief executive officer, co-founder of Modi Health, with us on the phone from Los Angeles. Put that on your to-do list?
Yeah, absolutely.
Have you gotten one?
Not since the pandemic.
I know, right?
Yeah, we got to reduce that stress. That's the way I can do it.
Okay, we got to work on that. All right, you're listening to Bloomberg Business Week. Chart of the day coming up in just a moment.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So if there is a theme to today's broadcast, sorry everyone, it's behind the scenes because we just cannot stop talking about sleep.
It's the weather. I blame you. Look outside. It's a little gloomy today. That's what it is,
Want
Carol.
to curl up in front of the fire, maybe?
Part of it's
I don't
because
know.
the Apple
It's too
Watch
hot.
news we're talking about.
Exactly. Just talking about with Dave Wilson, who is going to be with us in just a moment because we've got the chart of the day.
Oh, and also the song of the day, and of course the stock of the
Maybe
day.
it'll be a
all that.
lullaby.
Yeah. Are you doing the song of the day, Carol?
I've been good, although we didn't get to it yesterday because we had a press conference.
All right. Well, we'll study for it. In the meantime, let's go check on the trading day with Charlie Pellet. Hey, Charlie.
Well, hello there. We've got 28 minutes to go ahead of the closing bell. S&P 500 index just below a record close right now. S&P does remain higher up by 5, higher by about 0.1%. Key takeaway, we are well off session highs right now with the Dow slumping 34 points, down 0.1%. NASDAQ Composite Index, unless something dramatic happens in the next 27 minutes, on track for a record close there, up 73 points now, higher by 0.5%. 10-year yield, 1.30%. We do have gold higher, little changed, up $1.22 the ounce now, up by about 0.1% at $18.14. And West Texas Intermediate crude, lower, little changed on 3 cents, $68.47 a barrel. Mega cap companies rallying to close to records right now as traders turn to defensive shares after the latest round of economic data suggests a slowdown in the labor market recovery. Vaccine mandates are set to get more common in the workplace. A survey from consultant Willis Towers Watson finds a majority of American employers, 52%, are planning or considering requirements for a COVID-19 shot by the end of the year. Meanwhile, do not give up that mask. That according to Dr. Bhakti Hansati, Associate Professor of Emergency Medicine at the Johns Hopkins Bloomberg School of Public Health.
I would say right now the recommendation is absolutely have your mask on, especially if you're indoor. If you're an outdoor social event, have your mask on unless you're able to maintain social distancing of greater than 6 weeks. We just got to go back to basics and make this simple again.
Dr. Hansati with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we track, Pfizer shares are down 0.5%. ADRs of its German partner BioNTech, they're up 0.6%. ADRs of AstraZeneca up by about 0.7%. Moderna higher now by 3.7%. J&J, Johnson & Johnson up by 0.2%. Again, recapping S&P trading close to a record, up 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. This is Bloomberg. '90s?
Something like that.
I have no idea. Give Up the Fight? Is that the song? No. Paul Brennan, do you even know this song?
Wow, wait a second.
He says yes.
I Googled it, and I'm very embarrassed, but because I've listened
As
to
you should be.
Well, this isn't from Dookie. It's not from, 1994, but it is Green Day.
It is. 21 Guns.
Would never have gotten it.
21 Guns.
Reg, thanks for the assist, Reg, sending it in the chat.
There you go.
What album is this from? What year is this one?
Album is it? Well, come on, Tim. You're already in Google.
Just Google it.
Just Google the rest. Carol will tell you how it's done.
Yeah.
She's the Google expert.
Yeah, this is the band of my youth, but I was an early Green Day, earlier.
This
albums.
is later.
Yeah.
What's the song's name?
21 Guns.
21 Guns. Okay.
Now, why 21 Guns?
I like it, Dave.
Think 21 years.
Oh, 21. Is it 21st Century Breakdown? Is that the album?
Yeah,
There we
that's
go.
it.
Okay, see, Google. All right.
Yeah, absolutely. In any case, go back 21 years. That's how far you have to go to find the last time the makers of food, beverage, tobacco, household products carried as little weight in the S&P 500 as they do now. And you may remember March 2000, which is really what we're talking about. That was the top of the dot-com years. So we're back there. And, our numbers show it, and it's something that Strategic Research Partners pointed out on a Twitter feed yesterday. And you look at this group, consumer staples, that's how it's labeled in the S&P 500. And at the end of August, you're talking about roughly 5.75% of the S&P 500's value. That weight is the lowest since March 2000, when you got down to 5.4%, a little below that. And bear in mind, this index only goes back to the late 1980s. So you're talking about record lows potentially for this indicator. It just shows you how things have kind of moved over the years, and more specifically this year, because actually you go through those 11 main industry groups, consumer staples have the smallest gain. So it just goes to show you, this is an unloved group. You go back to 2008, 2009, the weight was more like 14%. Now it's below 6.
Tim is stroking his chin. He's
I'm trying to think about what this indicates, right?
Like, why do I care?
Well, and also, is there something to be said about the times in a cycle when investors go heavy on food, beverage, and tobacco?
Yeah, they tend to go heavily into it when things aren't looking so good.
Exactly.
I mean, you're talking about more defensive areas of the market. I mean, the stock chart does have a bit of a bounce last year when we had that short-lived bear market, and you actually saw the weight get closer to 9%. So, these things do tend to have some pattern to them, you might say.
So is it the other sectors get overinflated like they did during the tech bubble? And is that maybe what we should read into it?
Well, that's the question. It's certainly something that people who think stocks are overvalued can take note of.
Okay.
And if you haven't seen this chart already, folks, send me an email. I'll get it to you with the explanation that goes with it and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Did you say the quote that Strategas put out in a Twitter post? Did you say that? The group offers zero advantage.
Well, there you go.
Ouch.
That's the times we're in.
Dave, time for the stock of the day. Give it to us.
Vera Bradley.
Oh, I was looking at this
Oh,
one.
yeah. You feeling good about this company? I got to tell you, a whole lot of investors are not today.
What's going on?
It's the women's accessories
Very
and
distinct.
apparel retailer.
Yes.
Yeah, it's got its own style.
Yeah.
I guess Carol's done some shopping there.
I
In
actually
any
don't
case,
own any, but I know of it.
you know of it. Well, that's part of the problem because you look at their fiscal second quarter. Earnings and sales came up short of analyst average estimates in a Bloomberg survey. They cut their projections for the year. We're talking fiscal periods here. They also brought down their profitability forecast, gross margin. Like a whole lot of other companies, they're having to do more shipping via air freight, and so their costs are going up. Put it all together, Vera Bradley, ticker VRA, down 14%, headed for its biggest loss of the year.
Still up 24% this year. So it's been on a tear. Even with that drop, it's still up.
Now it's kind of, falling back to the market, you might say, if you look at where the S&P 500 is.
Well said, as only Dave Wilson can do.
Check out Dave's stock of the day just after 4:15 p.m. Wall Street Time on Facebook, LinkedIn, and on Twitter @TheOneDave. Thanks so much, Dave Wilson, stocks editor. Let's get a check of the latest world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. Louisiana residents still reeling from flooding and damage caused by Hurricane Ida are scrambling for food, gas, water, and relief from the oppressive heat. Electric company Entergy says it has restored power to parts of eastern New Orleans, but did not specify how many homes and businesses had lights. White House Press Secretary Jen Psaki says President Biden will visit the area later this week.
On Friday, the president will travel to New Orleans, Louisiana, to survey storm damage from Hurricane Ida and meet with state and local leaders from impacted communities.
Psaki says more than 40% of Louisiana remains without power. Full restoration could take weeks. A Texas law banning abortion after the 6th week of pregnancy is in effect for now. Challengers are hoping the Supreme Court will speak up. Bloomberg's Amy Morris reports from Washington.
The Supreme Court didn't take any action last night as the law kicked in. Challengers say it bans abortion for at least 85% of women seeking the procedure in Texas. The law allows private parties to sue anyone who helps a woman get an abortion. If it stays in effect, the Texas law would be the strictest abortion restriction in the country, prohibiting the procedure before many women even know they're pregnant. If the Supreme Court allows it, it will indicate a readiness to overturn Roe v. Wade. In Washington, I'm Amy Morris, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Masser, Tim Stanovic in our Interactive Brokers studio. This story catching our attention. Nomura Holdings, Tim, telling its staff in Japan not to smoke during working hours, even if they're working from home.
Yeah, the country's biggest brokerage sending a memo to employees that outlined the new policy that will come into effect starting in October next month. That's according to a spokesperson. The company is going to close all smoking rooms. Yes, those exist in certain places. Smoking rooms that are managed by the Nomura Group, that by the end of December. That's pretty, how do you go from having smoking rooms, to saying don't smoke at home? That's a very quick, abrupt move, right?
It's a big move, and it's also, this story reminds us the rules are going to be based on mutual trust, don't include a punitive clause. The company doesn't plan to monitor whether employees working remotely are following the guidelines. Nomura is introducing the measures apparently to create a favorable working environment, prevent secondhand smoking, and promote employee health. It said this all in a statement. I guess it put out a couple statements today.
Yeah, it's interesting because this is happening across Japan right now. Nomura is the latest Japanese firm to take action against smoking. This as health risks associated with cigarettes draw increased attention. About 2 in 10 smokers said their cigarette consumption has increased as a result of working from home or staying home during the pandemic. That's according to a March poll by the National Cancer Center in Japan.
So some of the conversations that have come out. It's a bit controversial, I think, fair to say, and people will get into, well, wait a minute, what about my right if I want to smoke? But we know there is a cost, certainly, to our healthcare system, and companies increasingly are looking at some of those costs and saying, well, and you do wonder if there will be, we talk about carrot and stick when it comes to getting the vaccine. Will there be more carrot and stick when it comes to, if you smoke, well, you're going to have to pay more for your health care because the potential for you to have more illness is there.
And the company has some pretty strict, or I should say some ambitious goals as far as numbers go. The company is looking to reduce smoking rate among its employees in Japan to 12% by 2025. That compared to 20% in March of 2020. That's according to its website.
And the brokerage's latest policy also strongly recommends that people keep away from its office for 45 minutes after smoking at lunchtime or breaks to prevent third-hand smoking. That's pretty harsh. All right, this is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a sports headline, and the New York Mets say acting GM Zach Scott will not be on its road trip after a DUI charge this morning. Stocks trading a little change right now. Earlier gains are fading, with the S&P up now by 3, higher by less than 0.1%. Dow Jones Industrial Average down 47, a drop there of 0.1%. NASDAQ, though, does remain higher. The NASDAQ Composite Index on track for a record, up now by 64 points, higher by just about 0.4%. So it is now a mixed Wednesday. We do have the 10-year yield 1.29%, and the Dow Jones Industrial Average, as I mentioned, is trading lower by 49, down 0.1%. Gold up 1/10, higher by $1.30 the ounce at $18.19 the ounce, and West Texas Intermediate crude down 17 cents the ounce now, the barrel now, 68.33 on WTI, drop there of about 0.3%. Traders turning defensive after the latest round of economic data suggests a slowdown in the labor market recovery. Gains for U.S. equities fading with 12 minutes to go ahead of the close. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everyone. 10.5 minutes left in today's trading session. Bouncing around. As you mentioned, Tim, we're definitely off our highs of the session here.
Yeah, the Dow is lower. The S&P 500 is higher, but just fractionally right now by 0.06 The NASDAQ higher, though, by 0.4%. The Russell, the leader of the pack.
Yeah, but listen, we have talked so much about the nonstop records when it comes to these major equity averages, even if we're seeing maybe a little bit of a pullback here today, certainly in the Dow. Let's get to it, though, with the drive to the close and Leo Kelly. He's founder, CEO, CIO over at Verdance Capital Advisors. They oversee about $3 billion in client assets, and he's with us on the phone from Hunt Valley, Maryland. Leo, how are you?
I'm well. Good to be with you guys again.
Well, what do you make of the market moves? It does feel like we were getting ready for the 54th record on the S&P 500
if it closes at a record today, that would be 54.
What is it? Does it make sense to you?
It does, and it does because there's just so much liquidity and so much money flushing around the system. You really don't need a great boat if the wave is that big taking you to shore. It's just a massive liquidity cycle we're in.
How big does that wave get, and how long does that wave last?
Well, I think there's an important variable, and that is valuation that you have to put into the mix. The wave, from an economic standpoint, is going to last. There's just so much money, and we still have two catalysts in front of us, and that is the recovery of supply, which is an incredible problem for the economy at the moment, and probably the one contributing factor to it not really blowing off the top. And the second is the return to employment for a lot of folks that are hesitant to get back in the workforce.
Let's start with recovery of supply first, and we're going to talk about employment in a minute because of Friday's jobs report. When you say recovery of supply, what supply were you referring to specifically?
It's all over the map, right? Whether we're talking about chips or we're talking
supply
about
chains, right?
A washing machine. We're talking about the entire supply chain, right? Everything is right now disrupted, and as that recovers, the economy has some more legs in it. And again, there's plenty of money out there. The consumer is healthy. The consumer is ready to buy. Their optimism has waned here recently, but that can recover pretty quickly.
There are some interesting things going out. You know, you do wonder, Leo, are we going to get to a point where, because of the difficulties in the supply chain, we've already done the stories about chips, that could we eventually have a glut, you know, as these companies ramp up to meet these, you know, heightened demands and get more access to things. And so what does that mean maybe down the road? You talk about, you know, all the liquidity that's out there. There's lots of cash, or Gina Martin Adams talked about it. All of that cash has to go somewhere, and that's why you continue to see certainly support for U.S. equities in particular. How does it end? Do we know the end of this story or the end of this cycle yet?
Sure, we know the end. It ends badly.
Oh.
We know the end because it's happened so many times before. What we don't know is how many pages the book is. So the challenge with an event like this, will we get a supply glut? Of course, because the natural force of greed is going to ramp up supply significantly, and there'll be plenty of demand to support that. We'll see valuations in equities continue to climb as earnings do extraordinarily well next year as a result of all this. And sooner or later, enthusiasm exceeds reality, and price has a blow off top, and that never ends well. But the challenge as an investor is that these things can go much higher than expectations or reason. They go much lower than expectations or reason when things are bad. And so it is to maintain one's head in their process of allocating assets.
I want to come back to that, and before we come back to that, I want to hit on what you said about the second element of the catalyst that we're talking about, the return to employment. We are expecting the August jobs report coming at 8:30 on Friday morning. What do you think? When do you think we'll see full employment again? Do you think we'll see people go back to the workforce the same way that they left the workforce, like to that same extent?
Yes, I do, and every new paradigm is usually debunked with time, because we get these anomalies in the market. Now, I will say this. This is probably one of the greatest anomalies of all time. To shut down a multi-trillion-dollar economy through an artificial means in an abrupt fashion, and then to turn that economy back on through trillions of dollars of liquidity, both fiscally and monetarily, thrown into the system, which was matched by pretty much every country in the world, is going to create enormous anomalies, aka a 1.3% Treasury with inflation and GDP growth, like we're seeing today. It should be 5% based on those numbers. So yes, employment will come back. What we need is we need quote unquote normalcy, right? Kids back in school.
Yeah.
We need these extra unemployment benefits to slowly find their way out of the system.
Leo, it's so interesting what you said about the early unemployment benefits, because there is an article today in the Wall Street Journal by Danny Doherty and Sarah Cheney-Camden that said that states that cut unemployment benefits, they saw limited impact on job growth. There are a lot of caveats here that it could be too early to tell, but we didn't quite see the surge in people returning to the workforce in states that had cut off earlier the access to unemployment benefits.
Yeah, there's data that will argue different points, right, based on which data measure you're looking at. I try to take a long-term point of view because that's how I invest. I'm not a trader. And so when we look at a long-term point of view, in the end, human beings are motivated to go to work for two reasons: to create purpose in their lives and to create income for their families, right, to create a means of sustenance. And so that can't be replaced just with benefits. And so as the economy continues to stay heated and there's money in the system and pay goes up, which, by the way, makes inflation something other than transitory, which is another issue, you start to pull folks back into work. And so if the pay goes down to stay home,
jobs report. We got some indications from the ADP report of some weakness within the labor market. And I guess, Tim, now we're wondering, all right, will the market read on Friday? Will it confirm, the Labor Department read, will it confirm what we got today?
Yeah, look, there's a lot of controversy around actually reading too much into ADP figures and the way they differ from the government figures that we get. On the first Friday of every new month. But certainly investors are looking toward that number. But today's miss was pretty big. Estimates were for 625,000, and that read from ADP gave us 374,000. So traders getting defensive.
Getting defensive. Actually, volume's been higher on the day versus the last 20 days. Of course, the last 20 days have been the depths of the summer, but we're still up 10% in terms of your average volume on the S&P 500, and same for the NASDAQ and the Dow Jones Industrial Average. People are putting some action to work, whether or not that means because they're all slipping off for the weekend already.
And you think about what this means for the bond markets. What is that telling you? I know you guys, Romaine was joking a little bit earlier when I said that the 10-year was back below 130. This really does highlight, though, some of the range-bound behavior that we have seen, and yet some of the big calls from JP Morgan saying that don't get too complacent. You could see this going back up to a 190, though I hate to say it, we have heard that a lot before, Romaine.
All right, so a pretty wild day here in the markets. The Dow Jones Industrial Average has actually been in the red for a good portion of the day here. It looks like it's going to finish in the red, down about 50 points or so as we wait for these numbers to settle. But no matter how they settle, the Dow is going to definitely be in the red, down about 1/10%. We're going to wait for the S&P 500 to settle here because right now it is up 0.03%, 1.5%, 1.5 points, I should say, spot points here. So it'll be interesting to see if that holds. We should point out that the rally that we saw earlier in the day wasn't necessarily a strong rally. The S&P was up about 0.3% at its highest level on the day, but giving that back, no matter if it does close in the green, it's not going to be good enough for a record high. The NASDAQ, though, that did manage to hold on to some of its gains here on the day here. It'll be interesting to see how that closes. 50 points higher here, 0.3%, and just double checking here, yeah, that's going to be a record high if it holds that level. The Russell 2000, that's your outperformer of the day, Carol, up about 0.6%.
I'm going to sound like a little bit of a broken record because I keep focusing on what's going on in China and the Chinese stocks. They're up for a third day in a row, another 3% gain in the NASDAQ Golden Dragon China Index. So it seems like investors taking a little bit of a breather, Taylor, when it comes to some of the concerns and the oversight that we continue to see from Chinese regulators.
And not a broken record, Carol, because you got huge PMI numbers out of China in particular this week that I know that we'll talk about later. But some of the nervousness from those numbers, you're maybe at least starting to see that within the equity market here in the U.S. For the radio audience, we take a look at the winners and the sector losers. I'll start with the winners, and it feels defensive, you guys. It's real estate, it's utility, it's household products, it's food and beverage. It's sort of those staples that are up anywhere from 0.5 to 1.5%. We go down to the losers, and Carol, this really tells it all. It's banks and it's energies and it's semiconductors that are off almost 1.4%. That is that continued rotation out of that reflationary trade that we've talked about.
All right, I do want to talk about some of the gainers in today's session. Now, Amazon was up a lot more earlier in the session. It was up about 1.6%, but this was a story largely in the markets of those big mega cap tech names. But Amazon was an interesting one today because they are talking about doing a lot of hiring. We had a great story by Spencer Soper about that they're worried about drivers, and they're telling their drivers, their companies that they work with, that saying, listen, if you smoke pot, it's okay. So it's an interesting story that's out there.
Amen.
Did you say amen?
Maybe.
Yeah, okay. Maybe. Boy, Romaine, I like
Are you against the cannabis industry, Carol?
No, I'm not. I'm for all industry. Good answer. I work at a business network. I'm for all industry.
All legal capital.
PVH, got to mention, they did their earnings soaring on a full-year profit boost. It was up about 15% in today's trade. And as I mentioned, the Dragon Index was up here. Some of those tech names, those Chinese ADRs, including names like Didi, they were up. What's interesting, Didi actually announcing a union for its workers, trying to appease some of the oversight there in Beijing, Tim.
Wow, close to 12% gain on Didi. Let's talk about some of the decliners that we saw today. AbbVie finishing off of session lows, or up from session lows, I should say. Down, though, still more than 7%. It fell as much as 12% earlier in the day. It was the biggest drop since March of 2020. This came after the FDA said that the arthritis medication from AbbVie will need a new boxed warning that points to an increased risk of death. That sent shares lower. It's supposed to be the company's next big drug as the top-selling Humira comes off patent and future sales paper. Also, keeping an eye on Wells Fargo. I know Carol covered this one yesterday. It finished the day down yesterday 5.6%. Today, down 4.9%. Bloomberg reporting yesterday that Wells Fargo may face additional regulatory action over the pace at which compensating victims of past scandals and then shoring up its controls. A lot of analysts weighed in today. One analyst, this one from Piper Sandler, said, quote, if this ends up being that regulators aren't satisfied, Caroline, this would clearly be bad news. Also want to check in on AMC, down more than 7%. Chad Bainon at Macquarie downloaded AMC from neutral to underperform, saying that the theater operators, quote, get this, fundamentals are nowhere near where shares are trading. Fundamentals when we talk about meme stocks.
Didn't Tim have us, though, on that he watched us yesterday? Didn't that make you all warm and fuzzy?
Yeah. Well, what else is he going to do in his off time?
I also love that. I think you said downloaded the stock rather than downgraded, which I think is kind of perfect.
Yeah, there we go, downgraded. That's right. Thank you, Caroline.
I think downloaded is where it's at.
No downloading movies from AMC yet.
That's what Caroline does to us all day.
I'm always downloading movies on AMC. Meanwhile, I'm having a look at what's also getting downloaded, the dollar. We're currently off to the lowest since August the 16th. We're off by 0.2%. Why? Well, that ADP number, the data that came in slower than expected in terms of the jobs data, doesn't mean the Federal Reserve will be there to just keep that stimulus there a little bit longer than we're anticipating. Aussie dollar did well because their economy did well over in August, up 0.7%. Let's look at commodities. That also speaks of a very mixed picture going on in commodities at the moment, as I see iron ore up 1.3%, steel getting a bid as well, up more than a percentage point. But Brent crude, this was the story of commodities today. Oil falling off by 0.5%. $71 is where we trade on Brent. Why? OPEC Plus saying, look, we're still going to be boosting our production. They think the demand will be there for oil. We fall that little bit. Meanwhile, I'm looking at across the sovereign bond market, again, a very mixed picture, but the ECB still all that speculation about whether or not they will pull back on the stimulus, pull back on the bond buying, yields spiking higher on Greek debt overall in Europe. Taylor.
It is a well-behaved, stable bond market. Remain, we keep this fast. It is unch on the 2s, 5s, and only really the 10s and 30s catching a 1 to 2 basis bid. We hover right there at a 130 and a 192 on the 30 years. I know that we also continue to push forward to some of the earnings announcements we get.
Yeah, Mocha Bear, if you're listening, cover your ears here. Sales slightly missing here, 2.16 billion. Hey, look, the street was really looking for on average by about 2.17 billion, so it's a modest miss off the average, but some of the high-end estimates, they really came in below the high end of what the street was looking for. They adjusted EBITDA here, and adjusted, put the emphasis on that. 23.3 million, that's a huge miss here. 34.8 is what the street was looking for here. Chewy shares down about 10% here. It'll be interesting to see sort of what this actually is attributable to, because it looks like people are still buying a lot of stuff there, but maybe costs have gone up, maybe input costs have gone up, or maybe people are buying cheaper products. Who knows?
How could they? Only the best
Yeah,
for
how
Mocha
could-
Bear.
right,
Oh,
right.
Maybe Spot has put on a lot of weight and they're just saying, okay, enough with the treats.
Yeah, I'm having a look at the earnings statement, and they're saying they've crossed the halfway point in 2021. They said the results once again demonstrate strength, so they're not talking about any sort of lackluster element there. They say the business remains healthy, and second quarter net sales up 27%. So we'll have to dig into maybe analyst calls and the earnings calls to really understand what's happening. They say there's an uncertain market condition due to the ever-evolving COVID-19 pandemic.
All right, well, earnings are certainly evolving here, and we are also following shares of Okta after hours. The company reporting earnings today, shares falling 6% post-market after earnings. The company did boost its fiscal year revenue forecast. It did beat estimates. Second quarter adjusted loss per share coming in at 11 cents, beating estimates which said that the loss per share would come in at 35 cents. Seeing that third quarter revenue, 325 million to 327 million. Estimates were for 321.7 million. The company seeing fiscal year revenue 1.24 billion to 1.25 billion. And analysts saw, Carol, $1.22 billion to $1.23 billion, but that's not enough for investors. Shares down 6.2%.
I'm going to say it's a bummer day for earnings because Chewy's down, Okta's down, and so is Five Below. That stock's down about 9.8%. By the way, the Okta CEO joining us on Bloomberg tomorrow. Five Below, and this is what you don't want to hear from a company, Five Below not providing guidance for the full year of 2021. We've heard that from a lot of companies, to be fair, because of the pandemic, but nonetheless, investors not loving this. Five Below seeing third quarter net sales, 550 million to 565. That is above the estimate of 548 million. Sees third quarter EPS 23 to 30 cents. The estimate out there is 28, so it looks like they're lowering that range. Remain.
Yeah, we definitely have to dig into that. I wonder how much of this does have to deal with some of those supply chain issues.
Yep.
Remember, we heard from Dollar Tree and a few other stores that I guess you can kind of put in the same basket as a Five Below, and they basically made it clear they're talking about weeks of delays right now of the shipments that they would normally be getting in here, and you wonder how much that has an effect here, both in terms of what they're able to sell and, of course, the cost, of course, of what they actually do receive.
And it's interesting after PVH, right, where they were able to manage their supply chain. So it's not the same story for everyone. All right. Stocks are down in the after hours. We see Chewy down about 11% here, so we'll be following that into...
It'll bounce back.
It'll bounce back. Roll over. Roll over.
For the pets.
All right, that's going to do it for our cross-platform coverage on Bloomberg Radio, Bloomberg TV, and on YouTube. We'll see you again, same time, same place, tomorrow.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It really is like kind of a bummer batch of earnings.
Look, investor expectations are really high. You said if it closed, if the S&P 500 closed at a record today, Carol, it would be the 54th record.
Yeah.
S&P 500 is higher by 20% so far this year. Expectations are high.
Yeah, exactly. And some of these have been some great pandemic plays, and so maybe there's a rethink that we have to in terms of earnings expectations. All right, you have a good evening.
I'll see you tomorrow.
See you tomorrow. Be careful in the rain. All right, let's get to world and national news and Nancy Lyons. Hey, Nance.
Hey, Carol. President Biden is in talks today with Ukraine President Volodymyr Zelensky, and he told him the U.S. is firmly committed to Ukraine's territorial integrity in the face of Russian aggression.
We're revitalizing the Strategic Partnership Commission between our nations, and we're also creating a new strategic defense framework and a new $60 million security assistance package.
Biden will likely be pushed by Zelensky to help Ukraine join the NATO military alliance. A high-profile diplomatic appointment to another nation is putting the president under pressure.
Congresswoman Alexandria Ocasio-Cortez is calling on the Senate to reject the president's nomination of Rahm Emanuel to be U.S. ambassador to Japan. In a statement, the progressive Democrat from New York accuses the former Chicago mayor of helping to cover up the police murder of 17-year-old Laquan McDonald. Now, this comes just days after Ocasio-Cortez joined a progressive pressure campaign against Jerome Powell getting a second term as chairman of the Federal Reserve. Emanuel has already faced opposition from the left. Progressives came out against him during the transition on reports President Biden was thinking of naming him transportation secretary. In Washington, I'm Nathan Hager, Bloomberg Radio.
Heading out of town for Labor Day weekend could cost Americans more at the pump. Gas prices keep rising toward what could be the highest Labor Day weekend prices in 7 years. Today's AAA survey of stations shows the national average price of regular is up to $3.17.4 a gallon. That's a cent and a half higher than Tuesday's average. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. I'm Carol Masser, and let's get back to some of the stories catching our attention on the Bloomberg. Charlie Pellet with me. You sent me this story. I've got to say, I've tweeted out some of the images. What's going on in Lake Tahoe, Charlie? Really disturbing and upsetting.
Absolutely heartbreaking. We've got firefighters battling gusty winds. They're trying to keep that raging wildfire out of the resort town that South Lake Tahoe. Lake Tahoe's evacuation orders spread into Nevada. But I tell you, it just seems that everything is working against firefighters out there just trying to do what they've got to do.
No, and, you know, we have seen some of this, right? When some of the fires, we've seen some of our skies get affected as the winds move from west to east, obviously. But what we're seeing in Lake Tahoe and the fires that they are fighting, it's just unbelievable. I was watching even some local coverage that was out on social media yesterday of people just driving through the area, and it's just fire after fire, and we're talking, you know, I guess the Caldor blaze grew to more than 200,000 acres overnight, continue to threaten the city, as you mentioned, Charlie, of South Lake Tahoe. It sits on the southern tip of the Alpine Lake that straddles California and Nevada. Fire officials saying they were trying to steer the blaze around the city and into burn scar of the nearby Tamarack fire, which was ignited by lightning. That was back on July 4th and is 82% contained. I mean, they keep their fingers crossed, right, that the winds die and that they can start to contain this.
And just show you just how desperate things are, though. We've got a couple of ski resorts out there, specifically Kirkwood and Heavenly Resorts. Interesting idea. They say they're using their snow cannons to spray water on bone-dry slopes and critical buildings as those gusty winds push the Caldor fire near the ski lodges. They're also putting out snowmaking hydrants that are ready with hoses spread out over the mountains for firefighters to use. And should point out that both Kirkwood and Heavenly Resorts, they are both part of Vail Resorts.
We are actually, Tim and myself are going to be talking with the Vail Resorts CEO tomorrow, so we can get a firsthand account of what's been going on and what's at risk and how they've been, trying to help in this situation. Charlie, thanks for sharing that story. Charlie Pellet there. I'm Carol Master, and you are listening to Bloomberg Radio. And don't miss Sound On with Joe Matthew. That's coming up at 5 p.m. Wall Street time right here on Bloomberg Radio. Joe and his guests, they'll talk about the fallout of the U.S. withdrawal from Afghanistan. That's Sound On today at 5 on Bloomberg Radio. It is 4:15 on Wall Street. That means it's time for another check on traffic. For that, we head on over to the Bronx River Parkway. What do we got?
Carol, the Bronx River Parkway northbound coming in over by exit 21 Main Street in White Plains. An accident just being cleared away, so the left lane is now reopened. The traffic is already a bit slow getting past this area. Southbound, some slow traffic as well. 684 northbound, already a bit of a heavy ride. 10 minutes extra getting in towards 84. Down into Manhattan we go. Looks like the west side for the ride up to the George Washington Bridge. Brake lights will begin to light up in the mid-80s or so. It stays slow all the way on up. Already a very slow ride coming up the Harlem River Drive. Outbound side of the Holland Tunnel, 20 minutes. Inbound 10, 20 minutes out over at the Lincoln Tunnel. Looks like the ride, if you're traveling in New Jersey, quite troubled on the Garden State Parkway. Southbound, an accident at 160. Northbound, one at 145. Bloomberg 11:30, 3-day weather. Tonight, heavy rain, 65. Tomorrow morning, rain, 75. Friday, sunny, 75. Saturday, sunny and 80. Right now in Central Park, we do have clouds. We are at 73 degrees. This report sponsored by Wendy's Breakfast. Rise, shine, and dine. For just $1.99, head to Wendy's for a sausage or bacon, egg, and Swiss croissant for just $1.99 during breakfast hours. Choose wisely. Choose Wendy's. With the best ride in and out of the city, I'm Ed Kalegi, Bloomberg 11:30. Bloomberg Business Week continues.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Waters, I'm Charlie Pellet, keeping an eye on Chewy shares after hours. Chewy misses estimates, shares down by 11% after hours. That is the pet food retailer. Stocks turned mixed today, finished well off session highs. NASDAQ a record, up 50. It was a mixed day. Nasdaq up 0.3%. S&P faded in the final hour, ending with a gain, though, of 1 point. No record, up less than 0.1%. The Dow slumped 48, lower today by 0.1%. 10-year up 430 seconds. 10-year yield 1.29%. Broader stock market almost wiping out gains. Mega cap companies rallied as traders turned to defensive shares after economic data suggested a slowdown in the labor market recovery. Speaking of economic data, tomorrow morning, jobless claims. Friday morning, the employment report. Complete coverage as you've come to expect over the years on Jobs Friday, right here on Bloomberg Radio. Again, quick check of Chewy shares down 11.1%. 10-year yield 1.29%. Gold flat 18.14 the ounce. Crude West Texas Intermediate down 0.4%, 68.24 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We're going to stay with Chewy for a little bit. Charlie mentioning the stock is down more than 11% in the after hours. Prior to this, it was down about 1% year to date, so it obviously is going to move a little bit further into the red, possibly, I would expect, when the Thursday trade gets underway. Let's talk a little bit more about the quarter. Lucky for us, we have with us Bloomberg Intelligence consumer staples analyst Diana Rosero Pena. She is in our Interactive Brokers studio. So Diana, first of all, good to have you here. The stock down 11% in the after hours. Why are investors selling, or why do you think it might be, what might be behind that decline?
Well, I mean, it is a couple of things that are happening here. Obviously, the fact that they grew 26%, 27%. In sales, it was lower than consensus expected. So that is obviously questioning the momentum of the company going forward.
Is that just analysts getting it wrong and having too high hopes, or what do you?
I think so. I think, you know, they were going against as much as 47% last year. So, you know, just a 1% off might not necessarily be that big of a deal in the grand scheme of things. So, you know, that I think that is a big portion of it. Obviously, EBITDA came lower than expected as well. And also...
Right, and let's just put out the numbers. Second quarter adjusted EBITDA of $23.3 million. The estimate out there was for $34.8 million. That feels like a big miss.
Exactly. And part of that might be because of labor shortages as well. You know, they did warn that they are going to invest a lot of money on keeping their employees employed, because obviously they need them. So that might have to play into that, in addition to inflation that is rolling through the supply chain, and also wet food shortages as well might have played a little bit into that. But they do expect, I mean, obviously we have to see what they say in the call, but right. They do expect these headwinds to dissipate a little bit, probably not dissipate all, but you know, diminish a lot more in the second half of the year.
Yeah, I was just doing a quick search on labor in their press release, and I'm not seeing anything. So as you said, no doubt it'll probably come up on the call. What's interesting is from the release, the CEO, Sumit Singh, saying, we've now crossed the halfway point of 2021. Our results once again demonstrate the strength of our business model and the incredible bond between pets and pet parents. He went on to say our business remains healthy, with second quarter net sales up 27% year over year. You just mentioned that, driven by a 21% increase in active customers and a 13% increase in net sales per active customer. Customer engagement is growing, and we are confident in our ability to deliver strong results while navigating uncertain market conditions due to the ever-evolving COVID-19 pandemic. Customer engagement, that's something we want to see. We want to see if they hold on to their customers, right? And do those customers come back and buy more?
Yes, exactly. And I think they do have a lot of ways for them to expand their, addressable market. And it's one of them is that they have pushed in the past few quarters is healthcare.
That seems to be the big growth area for so many different companies, whether it's Petco. We've talked with Mars, right? That they too have a big investment in that area as well. How much, I mean, is Chewy there yet?
Well, they are, obviously they do prescriptions. They call it petscriptions.
Cute.
So, so they do, have some operations on that recently. As far as the past few months, they started on this connect with a vet for auto ship customers, and that is for people that are not able to, they have an emergency with their dog and they're not able to go to their doctor, and obviously, hospitals might not necessarily.
So telemedicine essentially for dogs?
Exactly, that's exactly it, and it's 365 days until 11 p.m. New York time. So it is a good, convenient way of easing your fears if there's something wrong with your dog and you can't get to the doctor. So that is, that seems to be something that they are focusing on, and it seems to be expanding that net sales per active consumer, which is actually a little higher than we had expected.
And that's a key metric, correct?
It's very key. Obviously, you want to see grow in active consumers because obviously that is, the number of members that you get, but the fact that they are increasing their spending per dog, that is also a very strong metric to have.
All right, so the stock's still down roughly 10, 11% here in the after hours. Just got about 40 seconds left here. What would be the questions that you think are crucial to be brought up on this analyst call?
So basically, short-term problems, anything that might be a stumble road for them in the second half. I think again, labor shortages might be in the mind of many investors, as well as inflation. We have seen in every single company that have had earnings in the past 4 weeks.
Right.
It's inflation all the way. So definitely that is something that investors are probably going to pay attention to.
And they have roughly, at least according to Bloomberg data, about 18,500 workers. Just quickly, 10 seconds. Are most of those distribution center workers, or it's a lot of different things?
Well, it's a lot of different things. They also have customer centers,
Okay.
which is also, very important part of their, workforce.
All right, we're going to leave it on that note. Thanks for the analysis. Appreciate it. Diana Rosero Pena, consumer staples analyst at Bloomberg Intelligence, here in our studio. Chewy shares, though, selling off in the after hours. This is Bloomberg. And be sure to join Brian Curtis and Doug Krisner. They will be live from Hong Kong and New York for Bloomberg Daybreak Asia. That is tonight at 6 p.m. Wall Street time. Their guests include the CEO of the Hong Kong Stock Exchange. That's Daybreak Asia, tonight at 6 on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So, you know, it's a big week when it comes to the U.S. labor market. We had the ADP numbers showing U.S. companies added fewer jobs than forecast. Tomorrow we get weekly jobless, Challenger, and then, of course, the big kahuna on Friday when we get the labor report from the U.S. Department of Labor. So we are talking about the workforce in a big way, and we're going to do that with our next guest, Richard Edelman, back with us to talk about the empowered employee. We'll get to him in just a second. First up, though, back to Charlie Pellet with some of the news. Chewy falling apart.
Indeed, Chewy shares moving lower after hours. Right now, we've got Chewy down by about 10%, but we've got somebody coming on to talk about what's going on in the workforce. A guest coming up, and I do want to talk about, maybe ask about return to work, because developing story right now, Wells Fargo pushing back its return to office plans by 2 weeks to mid-October. The company, which has the most employees of any American bank, will now begin bringing back staffers who have been working remotely beginning October 18th rather than on October 4th. So a lot of fast-moving developments in terms of work from home and return to the office. Chewy, investors taking a major bite out of Chewy shares after hours. Chewy is that online pets retailer, shares plunging now by more than 10%. Chewy missed estimates, shares lower, as I mentioned. Diana Rosero-Pena is a consumer staples analyst with Bloomberg Intelligence. She was interviewed moments ago right here on Bloomberg Business Week.
They did warn that they are going to invest a lot of money on keeping their employees employed, because obviously they need them. So that might have to play into that, in addition to inflation that is rolling through the supply chain, and also wet food shortages as well might have played a little bit into that.
And again, the stock now down by 10.5% after hours. The broader stock market almost wiped out its gains today. NASDAQ did climb to a record. The Dow lower. The S&P finished with a 1-point gain, up less than 0.1%. We're on track to see a record there. It didn't happen. NASDAQ up 50, record up 0.3%. And we had the Dow Jones Industrial Average down 48, a drop there of just about 0.1%. The 10-year, the yield there 1.29%. Gold up 33 cents. West Texas Intermediate crude down 0.3%, 68.27 a barrel on WTI. Again, recapping, equities higher, S&P up by less than 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie, as always. A couple of headlines just crossing as we speak. Moderna submitting to the FDA initial data for a COVID-19 booster, so that process continues. And also a U.S. bankruptcy judge signaling today that he's likely to approve Purdue Pharma's proposal to settle a mountain of legal claims over its addictive painkiller OxyContin. So again, just crossing the Bloomberg. In the meantime, Charlie really teeing us up so well, because reminding us definitely a big week for the workforce. We mentioned ADP today. We get another read tomorrow, and then, of course, the Friday jobs report. In the meantime, the giant global communications firm Edelman, they continue to do their own research on employers and employees. Their latest trust barometer is out, and with it, we get a reading on the empowered employee. So let's get to it with the founder and CEO of Edelman, Richard Edelman, back with us on the phone in New York City. How are you?
Hello, Carol. How you doing?
I'm doing okay, although trying to get the real picture, looking for transparency in terms of what's going on with our workforce, because it feels like COVID, once again, slowing down the return to work. Companies requiring vaccines. There's a lot of stuff going on. You talk to CEOs and heads of companies all the time. Before we get into your barometer, what are you hearing from them about the outlook?
I think it's very cloudy, and we can't get a firm handle on when the Delta variant is going to peak, and therefore all of us, including Edelman, have postponed return to office from the day after Labor Day to October, or, we don't know yet. And that there'll be a hybrid approach to the workplace is clear, that we want to keep our employees safe is the most important factor. And again, it goes into our study, which shows that, employees definitely have been changed by COVID because they're not going to just work for money or raises or advancement at the company. They just aren't going to do it. They have a different set of values now.
Well, and let's get into it. I've got the study in front of me, and I've been looking over it, and you guys do look at a lot of different things. And it's safe to say, I know in talking with peers and different companies, and people are leaving companies. What matters to them, sometimes it's now being able to work closer to home or to work part-time, to be more at home maybe with their families, or some of them are making, significant career changes or just dropping out of the workforce altogether. Tell us what you set out to do, though, specifically with this trust barometer, because sometimes you're looking at brands and the relationship between brands and consumers. This one really looks into what's on employees' minds.
Well, employees, somewhere between 20 and 40% of them say that they're going to quit their job in the next 6 months. And again, we were amazed that by a 2-to-1 margin, by 60% to 30%, people said, I want to work for a company that has great values. Half of them said, I want a different work-life balance. And only 30% of them said, it's all about the pay. That's why I'm going to change jobs. And so it's like a three-cornered tripod, Carol.
Yeah.
And so you got to be paid well, got to have a chance to advance. That's obvious. That's only table stakes now. In addition, I need work-life balance. I need a flexible workplace. And the last is, I want to work for a company I admire. I want to work for a CEO who stands up and speaks up on diversity and inclusion, sustainability, local policing, et cetera.
So what do you make then of all the financial firms? Because there's definitely a bidding war going on for, junior level investment banking. We had a story about Chinese companies going after quants and really competing with the Wall Street firms in terms of what they're paying their folks. I mean, when you look at this data, Richard, is there any breakdown or differences, variations when it comes to the type of industry that we're talking about? Because I do wonder if Wall Street, with raising the money, are they going after the right thing?
I think they're chasing the wrong rabbit. I mean, it's not enough to say to the Goldman employee who's working 100+ hours a week, we'll give you more money. I think that they want work-life balance, and they also want Goldman to do more investing in green energy or the future of diverse owned businesses. And so again, the smart company will also realize that the belief-driven employee will be more loyal, will advocate for your firm, will recommend it, as a place to work, and that's gold in today's marketplace, because we've got to keep our people as opposed to getting recruited away.
All right.
1/3 of the people have left their job because a company remained silent on a societal issue that they should have addressed, like the murder of George Floyd. So we've got to keep these people.
Right. It's much more, we talk about branding and branding loyalty among consumers, but you're definitely seeing those metrics play out when it comes to the employee-employer relationship. Richard, sit tight. We're going to come back, continue with the CEO of Edelman joining us on the phone from New York City. Let's get on over to Nancy Lyons, though, for another check on world and national news. She's in D.C. Hey, Nance.
Hey, Carol. President Biden is meeting this afternoon with Ukraine's president and offering a firm commitment to Ukraine's sovereignty in the face of Russian aggression. Volodymyr Zelensky thanked Biden for U.S. donations of coronavirus vaccines and a new $60 million package of security aid. Thousands of Afghan refugees are en route to the U.S. for resettlement and to other way stations around the world that the U.S. has arranged. But what are the long-term plans for them?
The influx of refugees from war-torn Iraq and Syria created political issues in Europe. Resettlement of Afghans will now have to be negotiated by American diplomacy, former State Department official Robert Hormat said in a Bloomberg interview.
This is going to be a very big issue in American politics, and we have just begun to recognize this. They're now in temporary quarters, but we've got to find long-term homes for a lot of these people, and we're going to have to work with the allies to do it.
Hormat said at the same time the allies and Afghanistan's neighbors will have to consult on how to deal with the Taliban. In Washington, Irv Chapman, Bloomberg Radio.
The lights are coming back on for some residents in New Orleans after Hurricane Ida left a path of destruction. Mayor LaToya Cantrell offered some good news today.
Some parts of New Orleans East started to see power as early as 1 a.m. This morning. Again, we do anticipate additional progress there, but it will be gradual.
Cantrell says right now they're trying to get people the necessities until all the power comes back. President Biden will be traveling to New Orleans on Friday to survey the damage. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. We've been talking about the empowered employee with Richard Edelman, CEO of Edelman. We'll get back to them, their latest trust barometer. In the meantime, I want to bring in Charlie Pellet, an interesting story by our own Matthew Boyle, who covers management issues and the workforce. And you're not empowered, Charlie, if you get on a Zoom call and you kind of mess up while you're on with maybe your work employees or your boss.
Indeed. And we've got a survey from an outfit known as Viopto, which says 1 in 4 bosses say Zoom call gaffes have led to someone getting axed. In other words, you do the wrong thing, you say. I was stunned by that number.
That's a lot.
That is a lot, just because people go online, they say dumb things, they, and I think about a couple of very high-profile gaffes that have happened. For instance, we had the toilet flush during the U.S. Supreme Court hearing. I don't know if you remember that story. That was, I believe, in March, April, May of last year.
Right.
And then there was the Mexican lawmaker who, I'm going to put this briefly and discreetly.
Careful, family show.
She was underdressed when she appeared on Zoom.
Yeah, that's not good. To be fair, this was a study done by Wakefield Research. It was done between July 30th and August 10th, focused on 200 executives at the VP level or higher at companies with at least 500 employees. And here's some of the things that people got fired for. Virtual meeting miscues include joining a call late, having a bad internet connection, accidentally sharing sensitive information, and of course not knowing when to mute yourself.
Exactly.
Oops.
And then, there's stuff
Some
that
of those
happens.
seem harsh.
And you know what? Years from now, we're going to look back on this. Everyone will have a story about the kid coming in at the wrong time or the dog jumping up on the table on the kitchen
I had the
table.
dog barking a bunch.
But there's all
Cookies
sorts
being delivered while I was on air.
Exactly, and then all the other stuff that we've done during the Zoom era. I remember attending a memorial service online, and you got one participant that shows up with like the Northern Lights in the background. That was weird.
Oh my gosh, we are living in a different era. All right, Charlie, thanks for breaking me down. 1 in 4 bosses. All right, saying that, this is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet, developing story headline, red sticky headline from the Bloomberg Professional Service. Breaking now, U.S. Department of Justice readying a Google antitrust lawsuit over ad tech business. Worth repeating, DOJ readying a Google antitrust lawsuit. Developing story. We'll have more details as they become available. Keeping an eye on Chewy shares after hours. Chewy plunging after earnings. Disappointed investors. Chewy shares trading lower now by 9.9%. Turned out to be a mixed Wednesday for the U.S. stock market. The S&P holding on to a 1-point gain of less than 0.1%. The Dow down 48, down 0.1%. NASDAQ higher by 50. A record for the NASDAQ Composite Index up today by 0.3%. 10-year up 4/30 seconds. 10-year yield 1.29%. Gold little changed, up 26 cents the ounce at 18.13. West Texas Intermediate crude down 0.4%. WTI 68.26 a barrel. Recapping, Chewy lower after earnings, down now by 9.8%. S&P up by 1 point. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, and just adding to what Charlie said about Google. Google shares, by the way, just down about 0.1% in the after hours. That Department of Justice case, it would be the second U.S. monopoly lawsuit against Google. The DOJ has been scrutinizing Google's agreement with Facebook. Google is already fighting the DOJ case over web search. But again, the headline, U.S. antitrust officials getting ready for a second monopoly lawsuit against Alphabet's Google over the company's digital ad business. That, according to a person familiar with the matter, really stepping up the government's claims that Google is abusing its dominance. All right, let's get back to our guest, Richard Edelman, Chief Executive Officer over at Edelman, still with us on the phone from New York City. I want to go through some of the highlights, too. I know we've been going over your latest Trust Barometer report. It is about the empowered employee. It's interesting because you take a look at maybe age differences. Young employees most likely to choose jobs based on belief. Is this really just a younger employees thing, Richard, or is it all age groups?
It's not only all age groups, Carol, it's a bunch of countries. China is actually the most profound finding. 87% of Chinese said that they feel that they can get their companies to change policies on what they're doing on sustainability, for example. So I think it's quite transversal. And this belief-driven person actually goes to the marketplace and says, I want to work for this company because I believe in it. And that's a really important thing for CEOs to appreciate, that by 9 to 1, if they speak up on issues such as human rights or economic inequality or gender inequality, they're going to get better people, because those people who are millennials want to be change agents.
Well, and what's interesting, too, in terms of your research, because I was curious about, in talking to employers and talking to employees, and increasing their power and leverage, is it people who are making a lot more money? Is it the middle income spectrum? What about those variations?
Again, it's across the income spectrum. And what's phenomenal is also the likelihood that these belief-driven employees are going to speak up. They're not just going to do it through the company channels. They're going to tweet it out or be on other social channels. They're going to even organize boycotts of the companies if they're not satisfied with the progress. So in a sense, you're doing a trade-off, Carol, between you want the belief-driven person who's going to be more loyal and more advocating, but you have to accept the fact that they're going to want to have a say, and they're going to want to say it publicly. And I think we should like that. We should be more transparent with them. We should show them what we're trying to do at our companies, explain our vaccination policy, for example, and then have them go advocate for us, because they're damn believable.
Yeah, exactly. And I think if anything, you and I have talked about this, like during the pandemic, employees really were, well, first of all, employers relied on employees who were now working at home and juggling a lot to keep their businesses going. But employees really were looking to their employers to help them with whether it was childcare issues, health issues. We talked a lot about mental health
Carol,
issues.
it's even bigger than that. The employer is the number one source of credible information because the world is so politicized now. Pew came out with a report today that said only 35% of Republicans believe in mainstream media versus 78% of Democrats. So I get my information from my company. I also expect my company somehow to retrain me because 80% of people are afraid of losing their job to automation or AI. And so, my company, trust is local, Carol, as we talked about before. Trust starts between my CEO and the company. And the my CEO part is so important. It's the number one thing in building trust between employer and employee is, does the CEO model the behavior?
Richard, how much of this, though, is the cycle we're in? You've seen a lot of economic and market and labor market cycles. I mean, right now, employees need workers. We talk about this every day on Bloomberg, that there's a disconnect, that there's more demand than supply right now. And I do wonder, do the findings of this latest trust barometer, do you think this stays with us, this empowered employee, going forward?
It's not just the empowered employee, it's also a belief-driven consumer who has this same sort of view about business as a force for good and business actually stepping into the void left by government on so many parts of our society. And so this is a long-term trend. And it's also consistent with investors who are investing in companies where there is a clear sense of good relation between employer and employee.
Hey, one thing I wanted to ask you about, and this is something we've talked about, I have certainly with my colleagues and just some peers off air often, is the burnout issue. And there is one of the findings in this latest trust barometer, that you talk about burnout, now a bottom line issue. Because the conversations often are that a lot of workers are saying, I don't think my employer really understands how fried I am. I may take a vacation, but I still come back and I'm fried because I'm still worried about COVID. I'm still worried about, will my job still be there? I'm worried about family members. Talk to me a little bit about the findings in burnout and what you're hearing.
Well, half the people in our survey said that they are feeling burned out, and 66% said, we think, we've done a lot more for our employers since the pandemic started, and we're not, getting recognized. So for me, the smart employer is going to say, I've got to pay them well, but I also have to care for them. I have to put my arms around them. I have to make sure that they appreciate, that they feel appreciated, and that they have, in a way, flexibility. For example, we don't have to have an 8-hour shift that you show up at 7 a.m. and, get off at 3. That we're going to make it clear that we want you to deliver your kid to school so you feel okay about it. Then you can jump into the shift at the second hour and make it up. So I do think it's an urgent need for employers to stop having an industrial era mentality about their workforce and have a human approach to it. This is the change moment.
Yeah, it does feel pretty dramatic. Hey, Richard, thank you so much. Always look forward to it. Richard Edelman, Chief Executive Officer, of course, founder of Edelman, on the phone in New York City. Well, coming up in just a few minutes is Sound On with Joe Matthew. Bye-bye. And Joe joins us right now from D.C. So, Joe, you guys are talking obviously about Afghanistan.
Yeah, we're going to get into that for sure. And we're, believe it or not, going to talk about something a little bit different here, which is, imagine infrastructure, the economic agenda, the stuff they're actually starting work on now, Carol. Imagine a hike in the capital gains tax, a hike in the corporate tax rate. That is how we would get to somewhere around $1.1 trillion, but they want to spend $3.5 on reconciliation. We're going to talk about the looming lobbying and ad blitz that Republicans have planned to try to hose this whole thing down with Eric Newhouse from the National Association of Manufacturers. That's where we begin on this Wednesday.
All right, looking forward to it. Back to infrastructure. It's certainly been very high up there, certainly on the domestic agenda of President Biden. Joe Matthew with Sound On coming your way in just a few minutes. That'll do it for the whole Bloomberg Business Week team. I'm Carol Massar. Have a good and safe evening.